Bang. Oh, yeah, boy. Righty. Um, Hey, let's go. Let's go. Let's go. Let's go. All right. To the moon live. That's right. Let's actually get into this, guys. I want to cover with you guys today. I'm going to go into some of the market stuff. Gold, silver, stuff like that. But I want to go into a lot of the trading techniques that I use in my trading. Um, that helped me when it comes to understanding it and also so what I've got written down for what I want to cover is obviously understanding the market flow so you can understand what's going on in the markets. Um, I'm also going to talk about probably one of the biggest mistakes I say most people make in their I'm seeing a lot of sound adjustment. Sound adjustment. Is that a bit better now? Top. Testing. To the moon, to the moon, to the moon. Buy more, buy more, buy more. TLT. Oh, he heard that one. He heard that. He heard buy more. Whatever, top. He heard that one. Oh, good, good, good. Okay, cool. So, so as I said before, like in this session today, obviously I'm going to cover some of the market stuff, but I really want to walk you guys through some things that I think that I know is going to really help you with your trading. Um, so what I have planned for today, anyway, for today's session is that firstly, I'm gonna go through some of the market stuff when looking at the markets, but I'm also going to be covering things like understanding the markets, what's going on, and how do we know what's going on. I think a lot of people really misunderstand how to read these markets properly. And the thing is that I want to really help you understand that because people are focusing on just because the market goes down doesn't mean the top is in. And so stuff like that. So I want to really walk people through this here. Also, I'm going to walk you through probably one of the biggest mistakes people make because they're doing the exact opposite to the way they're trading in the exact opposite way of how these markets operate, and that's causing them to lose a lot of money and get in. Their entries are really bad. Their entries are really, 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 really bad. Um, and so so that's actually causing them to actually not get ahead in the markets there. I'm also going to talk about things like what's called how to find if the buy, for example, how to find weakness in the markets. So, for example, if the buyers have been really strong for a while, how do you see that the buyers are starting to get pretty weak in the markets? And therefore, we typically, when the buyers get weak, we typically then get a rollover effect from there. So I've got a pretty cool chart there. And also, I want to talk to you guys about what's called a thing called like a channel projected target. This actually helps me identify where where a market is likely to go to. Once it has completed this pattern here in that there. So, and I'm sure there's many other things that I want to cover as I continue along with this journey here. in these markets. So one of the first things that I do want to start off with, though, is let me start off with this one here, right? Because I think it's really important to understand market psychology and market sentiment and market cycles. They're all, there's this all thing in the marketplace there, right? And let me do this here. So let me just bring this up to here. So okay, there we go. Yep. So what I want to discuss with you guys first is just understanding markets. There's always these cycles that's happening within all markets here, and one of the things that I see that people have when it comes to just understanding what's going on. Let me see if I can I bring this up to a big slide? Sorry, yeah, cool. One of the big mistakes that I see, or one of the things that I see, well, firstly, I want you guys to understand this, okay? If you actually want to be part of the 1%, right? The 1% that actually does really well out of trading. Can I do this? If you actually want to do really well, become part of the 1% well out of trading, well, then you know that 99% of the people will think you're going to be an idiot for taking a decision in the markets. So think about that for a minute, okay? Think about that. I want you to think about this here for a minute. Most people lose money in the markets. 90% of you guys right now are losing money in the markets right now. That's the numbers. I see it all the time. Most people lose money in the markets. You may make money every now and then, or you have a period of making money, but consistently no. And so therefore, the reason why I want to go through this with you is I want you to think about this here a minute, okay? The reason why the 1% are the 1% is I want you to think about this. The 1% take different actions than probably the 90%, right? So therefore, they get a better result there. And I want you to be thinking about this in the context of your trading and you getting involved with the markets there. Because when you look at the markets and when you're trading the markets, if you are entering a position and there's an overwhelming herd mentality in agreement with you, well, you are now part of the herd. And you do know, and this is an absolute fact, that if you are doing that, you are going to experience a lot of pain. This is the reason why it's actually hard for a lot of traders who don't understand this, and or a lot of people who enter these markets, and the reason why people that enter these markets never become good traders. They enter the markets because they just think it's going to be this easy thing, and they have no idea what they're doing. They lose a lot of money and all that sort of stuff. So I want you to be thinking about that when you're looking for opportunities in the markets here, right? Looking for any opportunity in the markets. Where are you in the cycle of things? Because if you're entering a position and there's a very good bullish sentiment around there, or there's a very good sentiment around what you're doing there, then you're probably on or in agreement with you, but either bullish or bearish, then you are on the wrong side. Right? Now, here's what I say here for that there. Initially, what ends up happening is this, okay? You may get into a position, like I'll give you a real example. I went long the bond market, right? TMF, TLT. And I did that many months ago, or about 3-4 months ago. And the last 3 months, as I'm doing this session here, the last 3 months, the bond market has gone against me. And the herd mentality has been, that's a wrong decision, John. You don't understand, and right? But that because I had so many people tell me I was wrong in under that there, I knew I was going to be right. And this is always the hardest thing about people getting ahead in the markets, right? Or getting ahead in life in general. If you go down this path of a wanting to be pleasing, like a people pleaser, or you want to fit in with the crowd, you want to fit in with everyone else, like yeah, like, and everyone's with you. Oh, that's a dangerous territory, especially in the markets, because that's when danger happens, right? And we saw that happen just recently with gold and silver, right? There was an over, and it's quite interesting, right? Because I think I was one of the only people that came out and was warning people for about a few weeks before that really big crash. I didn't know when that was going to happen, but we saw the big crashing in silver there, and in gold and stuff like that. But that was one of those. That was another one of those where I was putting it out, and there was a very loud noise around why I was wrong, and a broken clock's right twice, and all this sort of stuff. Now, a bit of a side note, the interesting thing about that is there's been many people on there. There's a lot of cowards on the internet right now, a lot of cowards, right? But the whole thing about that is this: if you actually want to get ahead in the markets, this is the law of the markets. If you are entering and you're getting in a position and you have an overwhelming herd mentality of noise, media, and YouTube videos, and you see a lot of people in agreement with you, you need to run for the hills, because most people lose money in the market. That's the reason why the market's around, because most people lose money. Not over 90% of people lose money. They don't make any money. And so therefore, if you actually want to be maybe if you're the 1%, meaning you are the 1%, that means you're out of 100 people, you're number one there. And if you want to be part of the less than 1%, now we're going to even take it even higher, right? So I want to do this session for you because I want to tell you the truth, right? This is the truth. Whether you like it or not, this is the truth. If you actually want to get ahead in the markets, and again, most people who are involved with the markets, they don't understand this because they hear a lot of noise, and then their emotion kicks into FOMO, and then they take the action, and then they lose a lot of money. FOMO never makes you money. Why? Because FOMO is you now chasing what has already happened, which is a big move. And FOMO is now what? Oh my goodness, everyone's getting involved with this. I better get into it. Just like happened with silver and gold before. And then there's big drops coming and so on and so forth. So no matter what position you're looking at here, right? That's why for me, I was happy to short silver a couple of weeks ago. And everyone was calling me, John, idiot, it's going to keep going up. This time's different, blah, 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 right? But if you actually want to get ahead in the markets, you must be okay with being against most of what you see on the internet. If you actually really want to get ahead long term. Because if most people on the internet are saying one thing, like especially when it comes to like media headlines and YouTube videos, then if you're in agreement to that, there's a lot of pain that's going to come there. So whenever you're looking for positions now, and that's why, like for me, I refer back to what I said before about my TLT position and my TMF position. My TMF position right now is not, and this is where like a lot of the times, or sometimes, like for example, TMF for me, a lot of the times when it comes down to that position, and I'll bring up the actual chart itself here so you can actually see what I'm talking about here. Right, so let's bring up this level here. So let's go down to say I'll just bring up this chart here and TMF, right? This is the one that I'm in right now. And let me walk you through this here. So when looking at the markets here, okay, now this is big sentiments. These are cycles in the markets. And so many people have they're so short-term focused and short-term. They're not thinking about big cycles. Wealth and massive or big profits come from identifying big trends and then be able to get involved with that trend and holding it for a while. That's where if you're day trading, you are screwed. Don't day trade. It is the worst form of trading out there. If you actually want to make a big profit, like a really big, you want to make a lot of money, right, from trading, of course. You want to make a big profit, right? Well, that doesn't come from a day trade. That comes from getting into something and holding it for many months and jumping on a really big move. So here's what I say here. And I'm utilizing this as an example here, right? Because there's an overwhelming news media out there, and I went long on TMF around about here somewhere, around about 41. Bought it and options. But I'm bringing this up as an example. I'm not saying this one thing. I want you to be thinking for yourself. And this is why most people don't do well out of trading, is because they want to fit in with the herd. They want to fit in. And if they do something, right? And this is the reason why the 1% are the 1%, because they can go ahead and take action regardless of what anyone else is telling them to do, because they know it's the right thing to do for them. And this is the reason why, the herd gets slaughtered. The herd gets slaughtered, especially in the markets here. It happens all the time. I see it on, I've been doing YouTube now. I've been trading now for 20 years. I've been doing YouTube since 2008, I think it is. So I'm going on whatever that is, right? They've been doing it for a long time. And I see different people come and go all the time. And I just know what's going on with them. They never really crack the code of these markets here. And so that's the reason why it's hard, right? Because if you take action in the markets and then you tell a lot of people about it, most people are going to say you're an idiot for doing it. And then you're like, maybe I am wrong. And then you start to believe them. And then, but the nature, especially when it comes to the market, the nature of you getting involved with something, right? And if most people are saying you're wrong, initially what may happen is you may be wrong on the short term. For example, me, I was wrong with my timing on TMF, the bond market. For example, here, right? I got in November, and then most of November, December, and January, this went down. Guess what I had to deal with, because I'm in the public. Oh, look at TMF's down again, John. I told you it was the wrong thing to do. He went long 3 months ago. People are so short-term focused. That's why they never make money in the markets. They're so short-term focused there. And so what ends up happening is, because they're so short-term focused, and initially the herd may be right initially, meaning like you can never time a really good entry, right? You just get involved with it and let it go. But because the last 3 months, guess what I've had to deal with? I've been very public about me being involved with TMF. And for the last 3 months, or what's that? Basically 2 months, 2.5 months here, I've had to deal with so many people telling me, I told you we're wrong, John. This is going to keep going up. This is going to keep going down. Interest rates are going to go up. The inflation's going to go up. Overseas markets are dumping all their bonds right now. They're selling. There's massive billions and billions. China's selling them. I've had to deal with that. But look what's happening with TMF right now. We're just starting to break out again right now. And so the whole thing about that is that initially, this is the reason why, again, this is the reason why the 1% are the 1% in life. Because they take action, and even though they're not right initially, they know that what they're seeing based off everything they've done, they're right. Now, there's also a risk to these things, right? But think about Michael Burry in Big Short. How did the big payday come for him? Was it because he was right straight away? Did he get the exact high of the Big Short? No. He was like, what was like? I think it was like 1 year he was underwater or something like that, like $1 billion or something. I haven't seen the Big Short for a while. But you guys have seen the Big Short. You know exactly what I'm talking about. And you're an idiot. And what are you doing this for? And you bet. And guess who? And then at the end of the day, the big bucks, the lot of money came from what? The 1% who believed in that, who saw this writing on the wall. Now, I don't agree with what Michael Burry with the whole risk management thing, but he was really confident in what he was doing there. But there's obviously a risk for everything, right? But what I'm saying is you have a good risk on your portfolio. You don't go loading up 50% of your portfolio in one position. No. Or even a trading account. You don't say, oh, well, I'm going to take my trading account. I'm going to put up 50% of my trading account in just this one position. That's not what it's about, right? We position through, I have many positions going on in the markets right now as I speak. I've actually 3. So, but the purpose of what I'm saying here right now is that if you want to get involved with this, yes, there's a risk. So apply some good risk management. But if you know, for me, and I'm really confident in what I do as a trader and the way that I see things happening, and I'm going to talk about that a bit later on about the actual interest rate side of things, then I know I'm really confident that we're going to start to see a lower of interest rates. It's actually not that, like, a lower of interest rates it's just part of the cycle analysis. But the purpose of me bringing this up here, and the purpose of me showing you this here, is back on from the war sheet cheat sheet, is initially you're going to get involved. If you want to get involved with really good markets that have the potential of getting a bottoming pattern and then making a big move, firstly, you may be off with your timing. You may have to be patient for a good 3-6 months while that bottom forms out. If you're so short-term focused, then that bottoming pattern is going to take some time. But you need to be looking at different positions like a time frame. For me, my entering of TMF was getting involved with it. This is an example here, okay? I'm not focusing all on TMF. I'm trying to give you an example of in the whole complete war sheet cheat sheet cycle, everyone hates bonds right now, and everyone thinks bonds are dead and it's got to go to crap, right? Bonds are bad. Bonds are bad. We've seen that so much time there. So the investment for me is, one, I'm just seeing it from the cycle perspective and the interest rates. Cycle perspective, I'm seeing technically why rates are going to come down, and then the herd mentality is against me. I'm like, this is a screaming yes for me right now. Why? Because everyone else is against me, or not everyone, but there's a few people there. But this position here, think about it, a good investment here is not getting involved with it and then 2 weeks later freaking out. Right? No. When I see TMF, when I get involved with TMF, this here is the weekly chart on TMF. I see TMF over the next, say, 1 to 2 years starting to rise, and 80, and then potentially when we do go through the next recession over the next couple of years, and which I do believe we're going to go through some sort of recession, then guess what? Yeah, they're really going to start to put on the printing press. They're really going to hit the rates hard. And they're really going to start to buy the bonds again, just like they do in every single rate. And then guess what? Boom, 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 boom. Rates are going to be up. This TMF's going to be up here around 100, 120, 140. And then they're going to start talking about the bond market. So this is a precursor to what's coming up in the next 1 to 2 years. I'm seeing this. That's why I'm invested in it already. I've invested in it, and I also have options. So the whole thing now, long dated option, right? The 1 year worth of expiration options, because I know I need to give this time to let it filter through. But if you are at major turning points in markets, and if you are with the herd, then there's a very big chance that you are going to be wrong through there. And once again, I'm trying to bring this down to you. What I'm trying to talk about in this session here is about identifying opportunities in the marketplaces and identifying different positions in the marketplaces that's going to give you the best chances of succeeding. And one of those things, especially when you're looking at the different positions we can take on all markets out there, right? Different sectors, different stocks, even different stocks, like sometimes you might see different stocks get beaten up and most hated on the internet and so on and so forth. So, and that's where, like, if you look at every sector out there, and I'm always looking at the barometer of where the public is with different sectors, right? And it's not just TMF here. TMF to me is a screaming yes, because cycles say we're probably going to go through a rate drop. Technically, I'm going to talk about technicals soon about the actual rates. But technically, I see this is a classic topping pattern with buys becoming very weak, and I'm probably going to get a down move. We already started that. And then the herd mentality has been saying that I've been wrong, and there's been overwhelming negative against my position in TMF and bonds. So now you understand why it's so hard to get involved with the markets, because I know I'm going to be right here. I'm already starting to be right now. I'm back to break even right now. So much for being down for 3 months, right? Here, I got into here and I got into here, and then right now I'm basically back at break even. So the whole thing about what I'm saying here is this: if you want to see really good opportunities in the markets don't come when there's the market is the opposite to what you think, right? And And when I say this is that the best buying opportunities from when there's the most fearful and the most hated, right? Most fearful and most hated. Think about this from a cycle perspective and different opportunities, right? I'll give you another really good example here. I'll give you actually a few good examples here of what I'm talking about of buying opportunities. And you'll go into, again, if you want to be part of the 1%, the 1% are going to be doing completely different thoughts and action than the 99%. That's just a fact. That's how you become part of the 1%. So therefore, you got to get involved with something, and most people are telling you you're wrong, you're an idiot. And even just initially, just like my TMF, you're going to be wrong on the timing. You're going to inquire a lot of heat around that, especially if you let a lot of people know, like I do sometimes, about my overwhelming things in the marketplace. So by looking at this here and by getting involved with the markets like this here, is that once again, if you're doing that, you're on the wrong bandwagon. And that's where, like, I'm looking at there's a sentiment here, right? And this is where you have to take away what you think about something and step back and then have a look at what's really going on. And am I with the noise? If there's a noise around the market, sometimes there's not, right? Sometimes there's no noise. Like, for example, XLE, there's been no noise. The energy sector, there really hasn't been any much noise around that. That's one of the reasons why I'm getting involved, because not many people are focused on it. That's another one of those, like, no one's focused on that. So that's the reason why I've been focusing on it. And you see what's happened through there, right? I called that last year. It's already started to happen. So the whole thing about all this here, I'll give you another example. TSLA, Tesla. Look at this here. Do you know back in 2025, Tesla here got crushed, absolutely crushed. Look at this here, from down there to down there, right? We're talking 50, what's that? Almost 60% down, almost 60% down in a matter of just a few months. What was that? From there to there? What we're talking about? Yeah, a matter of 2.5 months, 60% drop down here. Now, why? What was happening down the bottom here? I actually bought call options on this here, by the way. Me and my elite group did, my 1% elite group that I've got. If you're interested in that, getjohnshelp.com. That's getjohns.com. It's an application form. I only have about 20 people in there right now. I keep it really small. So if you want to get involved with it, you can apply. We can speak on the phone and we can go from there. But me and my elite group actually went long down the bottom. This is one of those situations where I'm like, this is a screaming buy. Now, what was happening down here? At the time, Tesla was getting absolutely crushed big time. Absolutely crushed big time. Now, at that time, what was happening? The news was what? Firstly, the news was covering how much Tesla stock was getting crushed. Oh my gosh, Tesla's stock's down 50% in 2 months. And why is that? Because, Elon Musk is part of the President Trump, and then they were burning the Tesla cars, and there was so much negative news about it, right? Stock's down 50%. Elon Musk is part of the Doge thing right now. They're burning Teslas. That's it. It's the end of the world for Tesla. Now, I bought call options down the bottom here. I'm pretty sure it was this day here. Because of the market was coming down and we had that exhaustion volume spike. But I'm not talking about entries here. So when I got involved with this, I knew I was going against what the big noise was saying against me. And then what ended up happening is what? We end up getting a nice rise, and you can see what ended up happening with that so far. We've had a nice rise with that through the last 12 months. From where there and there. You can see we actually ran up to all those highs. We had almost 100% increase from that there. Down the bottom here was what? Oh my goodness, Tesla's getting crushed. Oh my goodness, fear. Once again, the market, good. But now I'm talking about, like, if you're looking for these different situations in the markets, right? Whenever the noise is very noisy on one side, you're going to get, like, again, here, this example here. I'm like, man, this is a good buy. And then we obviously at the start of the year, we had the whole tariff situation last year and so on and so forth and stuff like that, right? We know that. So there was a lot of fear in the marketplace anyway. And then this was happening with Tesla. And I'm just like, this is probably going to be a good buying opportunity. And as you can see, right, down the bottom here, guess what? Most people were thinking, what? Oh, I'm not buying Tesla. That thing's down 50%, 60% in 2 months. What a piece of crap. They're rebuking, or they're going against Tesla right now. They're burning the Tesla cars. and then the market rises. I'll give you one more example to try to bring this home for you. Again, this is only if you actually want to be part of the 1%. I'm trying to share with you how to think properly around the 1%, how you can see these opportunities, if we can take advantage of these things. And then you might not, and again, taking advantage of these situations, you need to be patient. You need to give it 6, 12 months for that thing to start to really unfold. Like Tesla, right? It didn't happen straight away, but 6, 12 months later, and that's when you start to really increase your position there. Right. So for me, my trading personally is about, I would have to say about 70 to 80% system trades. I have level 1, level 2, level 3 trading patterns that I trade. And then maybe 20, 30% of the time I'm seeing these what's called situational trades where I'm seeing so much negativity, aka TMF. I'm like, what a good buying opportunity. But again, to the logic brain, people who don't understand what I'm saying here right now, it's one of the reasons why I'm spending so much time on it right now, is if you want to be part of the 1%, guess what? Go against the 99%. But initially, it's going to be so hard because you may get it wrong for a few months. And they're going to keep telling you, oh, how's that position going for you? Oh, look, you're down. Oh, look, it's against you. Oh. And then 12 months later, you're like, oh, look what happened. Oh, look what happened. Oh, look what happened. And then they're cowards and they run in the corner and they suck a little dummy and they ask mommy for a bot. Because that's what most cowards do, by the way. They'll give you shit in the meantime while you're going against what most people are doing. Just like I got with my silver position, by the way, as SLV was going up through here, I started warning people about, you know what, guys, don't start to get too greedy here because we're probably going to get a big sharp correction soon. I don't know when it's coming, but it's coming. And boy, I got the shit. And I didn't care what they said because guess what? I'm part of the 1%. I didn't give a shit what they said. Why? Because I knew that by my techniques, and I've been trading the market for 20 years right now, so I've got a good fear of these trading patterns. Whenever I saw this market going up and a big volume spike, that to me was an exhaustion volume spike. And I knew it was just a matter of time. I didn't know when. I thought it was going to be within a few weeks that would get a significant move down. But that's the reason why I went short here, regardless of what the herd mentality was saying. And what was the herd mentality saying? You had Peter Schiff out there saying, this is just going to keep going up. Peter Schiff, right? Whoa, right? Oh, this is just going to keep going up. The great reset here. This is a warning sign. It's going to keep going up. This time's different. Throw out your charts, blah, blah, blah. I had to deal with that shit. But the end of the story is what? I made 330% on one day on that big drop there. Thank you very much. 330%. And it took 4 days to make on that one trade there. I banked the profit, thank you very much, by going against the herd mentality. Now, initially, what happened? First day went against me. Next day went against me. Next day went against me. Right here. Now, I didn't know that was going to be the top, right? But as I was calling it through here, now I was calling, this is a short-term top, right? Not like a major top where you're going to start to spend, but I knew it was just too overbalanced. It was a bubble there, right? And that's what the charts are telling me. Hence the reason why I did what I did. And hence the reason why I was calling it. But I didn't, the job is not to know the exact day it's going to happen, but to know what's coming up so you can prepare yourself for it. That's being smart as a trader, right? Now, I'm not doing analysis on silver here, but I'm trying to give you this whole session here for you right now is to give you a whole sentiment and an idea around how do you actually be part of the 1%? Because most people are not part of the 1%. And they're so egotistical that they go, oh, blah, 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 blah. Right? They're just going down this path. I'm just like, listen, I've been trading the market for 20 years. I'm a trader for 20 years. I'm showing you my real equity curve for the last 2 years. Right? I do really well as a trader. Maybe I can teach you a few things, but no, it's like, but anyway, but that's what society is all about, right? And so therefore, I'm just trying to share with you opportunities. Now, guess what? Now, a lot of that noise got sucked out real quickly, right? I had many people, you know exactly what I'm talking about. You may be listening to me right now, via the live or even via the replay, and you gave me absolute shit for this call. Oh, market's not going to go down. Silver's not going to go crash. And as you know, through here, I started giving massive warning signs, and I had to deal with the shit. I'm saying this to you here is that if you're getting involved with the markets and you're with the herd, you are going to have a big boo-hoo on your face, right? Most of the time. But if you have a position and the overwhelming herd mentality out there, the media, the YouTube videos, and the noise in the comment section are against you, now you're part of the 1%. That's the reason why the 1% get the 1% results. It has to be, right? Because the 1% do something different than the 99% don't. So that's what I'm saying from there. And I'm trying to share with you here. So as you're looking for new positions in the markets, which I always am, I'm always seeing what's going on right now. That's where, no, we're not at the top in the stock market right now, even though what's happened in the stock market. Why? Do you know, even to this day, right? Even to this day, even though I can show you a chart here and we can go down to, say, for example, the S&P 500, and I can show you this chart, how we've been in a massive big bull market, and there's just big high, low, high, low. This is a big bull trend. But some people still think that there's an overwhelming herd mentality right now, still thinking that this is the major top here. We're going to start to go through a 50% correction because of blah, 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 blah. That's why I'm so confident being long the stock market right now. Now, initially, what may happen to me? It may go against me for the first month. And then guess what's going to happen? Oh, the cowards are going to come out on the woodworks and start blah, 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 on the good old internet, because I'm very public about what I've done here. But how do you handle that? How do you handle getting involved with the markets and being wrong initially? And also, especially if you told a lot of people about it, then a lot of people giving you shit about it. Oh, I told you, I told you, I told you, I told you. How do you handle that? How do you handle that situation where now maybe you're thinking, oh, maybe I was wrong. Oh my goodness, it's going against me. Oh. Stop it. No. Right? That's where I'm very confident over the next 6 to 12 months, we're going to be making another really big, strong rally up. One, because we've been in a big bull trend for 15 years and we're still in that trend. So it's probably likely to continue just like it does most of the time. Right? And when it does end, who knows when it's going to end, but it's not going to be now, because tops are not formed when a lot of herd mentality is negative there. But then again, if you are one of these people that like to fit in with the crowd, you like to be a people pleaser. I was once there as well. Oh, I want people to like me. Shut the hell up. If you actually want to really going to get good results, you got to be learned to be hated big time, man. That's one thing I've learned. Like, you actually want to start to become part of the 1%, get ready for hate, get ready for daggers and the cowards. I call them cowards because I've seen it so many times, especially on my silver call, that I had all these people, you're going to eat crow, John, in the market, and then suddenly the cowards, they go disappear. They're nowhere to be seen, right? So the whole thing about is like, think about where we are in the overall picture of things, right? And just understand, I just understand that of what is going on. Now, remember, guys, when we're reading the chart, when we're reading this graph here, the highs, the lows, the trends, we're reading the fundamental about that. So if there's fundamentals coming out in the market right now, it's baked in the price. That's what a price action is. It's all the technical and fundamental news that is happening, and by the way, is coming out because the market's smarter than me and you. You do realize when we're reading charts, that's what we're reading, right? We're reading everything, all the smartest investors and traders around there are building this picture here. But again, this is not a market updates per se. This whole session through here is to teach you, how do you be part of the 1%? How do you think differently part of the 1%? And why it's so hard to be part of the 1%. And it's taken me a long time to actually recognize this, and why I am always on the prowl for those opportunities. It's either the most hated or no one wants to be part of it, right? And I'll give you one more example here of what I'm talking about here, because this is actually, I saw this here. So Meta, which was Facebook at this time, right? This is Meta. Look at this here. Meta, big bull market, right? Big bull market. Oh my goodness, to the moon, right? Here we go. So big bull market with Meta. Now, here's the thing. I want you to be thinking about something here, okay? Yeah, big bull market Meta. But how could you have taken advantage of this big bull move? What was happening through here? Firstly, let's go back to here. As we were coming down through to here, do you guys remember what was happening? And again, this is another example why it's so hard to be part of the 1% and why it's so difficult. And again, this is the reason why this is one of the reasons why I do run a coaching program. Again, getjohnshelp.com is the application for that. But because if you want to be part of a group that actually thinks differently, that actually is in the 1%, that thinks differently and understands this stuff, right? If you're part of the You know, you're talking to your brother about it and he's just getting involved with it for the last few years, has no idea what he's doing. It's like, come on now. But what was happening down the bottom here with Meta? This is another, it's another one of these examples here of why the 1% is so hard, because they don't understand this market thing. And all we have to do is just stop and look back at the last 10 years and see these things like, oh. When the maximum fear in the marketplace, like you've seen just in the last 5 years, we've had 3 maximum fear periods in the stock market, and they've all been buying opportunities. That's maximum fear, herd mentality, fear, crash, recession. 1% says, I'm going against it, and they make money. It's the 1% who crush it in society. So how do you be part of the 1%? You need to go against the 99%. To do that, you need to be able to be strong about yourself and be very strong, because you're going to be handling a lot of shit and a lot of hate, especially if you're public about what you're doing, right? And so what was happening down the bottom here, right? Can I do this on a daily chart? Yeah, I can. Cool, right? So down the bottom here, right? I remember this very, 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 very clear. I'm just like, this is a screaming buy right now, right? Look at this here, this big gap down the bottom here. I'm not sure if anyone remembers what was happening with Meta at this time, but Meta got absolutely just crushed, right? Look at this here, all through here. So basically from 2022 down to there, in a matter of 10 months, the stock lost 75%. And we had this very big gap down right here. Let me zoom right in for a bit more so we can see it. Right, we had this very big gap down here. Very big gap down here. So we had this big gap down here on this Meta here. So, so the thing is so Peter says there were much better buying opportunities in April 25, like Nvidia, Google, or AMD. But Peter, mate, you must understand that getting involved with the markets is not about one position, right? It's about taking advantage of all the positions. You have a portion of your account on this one stock and another portion here, another portion there. That's what investment does. It's not like, well, this was the better opportunity because that's just the one opportunity. That's not smart investing. Come on, man. You know that. That's not the way the game works. Even with trading opportunities, you look at trading opportunities, you're going to have a few different opportunities going on at once. So anyway, moving on now. But here's the thing, right? Here we have a big gap down here with Meta, right? So Meta here, this gap down here was what? 75%. But this is when they come out with a record-breaking loss on their on their spreadsheet or on their balance sheet, on the balance feed. So when that happened, and when this happened, when it comes out, where is that thing? Where'd it go? Oh, there is it, right? When that happened back here, that was what? There was so much negative news. They put money into this metaverse. They put so much money in. They lost billions of dollars apparently, and it was so bad. So I'm trying to share with you examples that if you actually want to be part of the 1%, you know what you now need to work on, and it's a skill, right? It doesn't happen straight away, but it's a skill. The skill is that we need to be looking for these opportunities that's going against it, and this is why once again. The skill is for opportunities in the markets, and that's for me right now is the TMF position, because so many people are still against it right now, and they just don't see it. But then, just like all markets, right? Just like all markets, the herd won't start to get involved with it until it actually starts to move, because that's when the amateurs trade, right? We have a big move, then the amateurs get involved with it, and then it goes against them, and then it crushes them, and then that's what happens from there. So in the big scheme of things, this is a lesson here of how to actually truly think and approach these markets like the 1%, and how to take advantage of these opportunities. And once again, the whole thing about this is that this is not, you don't be stupid with this stuff. It's called a percentage of your account. Okay, this has a high probability of working out. Let's take a percentage, 5%, 10%, and put it into this opportunity. Let it go for 12 months. And then we have 90% of our trading account there to still put different things in different places and so on and so forth, right? One of the biggest mistakes I'm seeing right now is people just they're just crazy with it. Even if you've got a $10,000 trading account, you don't go place $5,000 on a trade. That's where you're losing it straight away. So anyway, the whole purpose of this level here is to show you through example and example and example of if you actually want to be part of the 1%, you know what you need to do. And if you are in agreement with the herd and you are liked and you're fit with the herd, and initially the herd's right? You're right. Oh, yes, I'm with them. And then you get mud on your face. So it's up to you. Do you actually want to be part of the 1%? Or do you want to get or do you want us to be part of the 90% that get run over by these markets because they're just going with the herd from there? Back a minute. All righty. So that was actually an unplanned session. For you guys that are watching live or watching the replay, I actually didn't even plan on doing that session. That wasn't in my notes, but I saw that. I'm like, you know what? Let's go down there. And then 40 minutes later, there you go. What a good session. Around how to be the 1%. And it's just, and if people really take that on, for you guys that really take that on, man. There's opportunities for the rest of our lives in the markets. And there's always going to be what? There's always going to be maximum greed and maximum fear in these different markets. There's always going to be opportunities. Right. So let's get into a few things here. Now, all right. So, now here's what I want to do in this session here. I want to give you a big picture view here, right? This is not short-term view, but I want to give you the big picture view of what I see happening with these markets and what's going on with these markets. And I want to share with you what's probably likely going to come up with all these markets coming up. Right, going to be coming gold, silver, stock market, and other things that may come up as well too. So one thing that I want to start with the stock market first, right? So the stock market here, as you can see, we're still in a raging bull phase. We have these short-term corrections that last a little bit, but that doesn't mean it's the complete end that we're going to start to go through a complete meltdown from there. Now, when it comes to the stock market, a few things here. Firstly, the market is telling you it's going up. So, and as you can see, it's continued to go up 15 years. And you've had these short-term little drops here. So if you are trying to say right now, and you're trying to use your little brain and trying to say, well, the valuations and the fundamentals and the news and this and that, and that's why right here, right now, as I speak, this one right here, that's the top, that's it, it's all over. You're kidding yourself. once again, if you're approaching the market that you've been 100% wrong for the last 15 years of calling a major crash, now a little correction, 15, 20%, sometimes a little bit more, right? Over the course of, say, sometimes a year or sometimes even a couple of months, that's short-term little corrections. That's not the major big crash that people think that's going to come, right? And so I don't understand why you would be trying to trade or look for something that doesn't happen that often. Doesn't it make sense to try to approach the market on the opposite side then? If something happens that often and it's going to give you the best chances of having an actual successful trade, you would actually go with that? I'm not sure what this idea about picking tops is, the fascination about it, right? And the market just keeps making new highs, new highs, new highs. It just blows my mind to actually see that, right? So firstly, technical analysis is number one, and we are in a very strong bull market here, and we haven't changed the trend, but the market will tell us. The market will tell us that we're starting to change, and when we do that, that's when we change. But for now, if you're calling a top right now, your ego is so far up there that 90% of the time you're going to be wrong. In fact, just look at the last even 4 months. We're still at all-time new highs right now. And everything's still very, 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 very strong. So if the momentum and the trend, and I learned this from Paul Tudor Jones, the legend, not from me, but Paul Tudor Jones, right? If there's a lot of trend and momentum in a direction, right? As you can see, the momentum and trend is still to the upside here. Looking at the big picture here. Then just go with that, right? Go with that. And all these thoughts that you're going to come up with about valuations and all this stuff, you can try to be smart about why you think that is actually going to affect the price right now today or coming up this week. It's just not going to be the case from there, right? And most of the time you're going to get run over. Most of the time you're going to be wrong. So we can go with that there. Now, also, I want you to think about this here from there as well too. Stock market analysis here is this. If you believe the death of the dollar, oh my goodness, the dollar's going to die, blah, blah, blah. Okay, cool. You know that's bullish for asset prices. That's actually bullish for stocks. So if the dollar does keep depreciating, that's going to be a pushing up effect on stocks. Up. Oh my goodness, the debt bubble's going to explode. Okay, cool. Before the debt bubble explodes, basically what's going to happen? They're going to default on the debt, right? What happens if they default on their debt? Do you think it's going to go down? You think that's really bad? Oh, you haven't studied history, have you? Learn from Ray Dalio. He's already studied this. If you've actually listened to the legends, he's told you about what happens if they actually default on their debt. Stock market goes through the roof. So not only are we in a rate cutting cycle right now, or firstly, start technical analysis 101. Technical analysis, very big bull market. And in fact, if I bring up just the weekly chart here on the S&P 500, right here, is that the weekly chart? That's the weekly chart right there, right? You'll be able to see that we're in a full-blown bull market, right? Bull market all through here. So if we do come down through to here, guess what? If we do drop down here, we're still at a very big higher highs, higher lows. So a drop today would not be anything. A drop in the market is not the top. A drop in the market is how trends are formed, right? Higher lows, higher highs. That's what markets do. So until that changes, we need to pull our ego aside and say, okay, the market's still in a big bull market and it can keep going up, okay? So firstly, technical analysis. Secondly, what's happening right now? We're in a rate cutting cycle, right? The rates are going down. Rates are going down, which is good for asset prices. Let's look at some fundamentals now, right? I'll talk to technicals, asset prices. We're in a now cutting cycle. They've restarted QE again. QT stop, QE has started, right? If you read Ray Dalio's LinkedIn article many months ago, he talks about this. I listen to the legends like a Ray Dalio because he's been an investor of these markets, a person who's actually made bets, not a commentary, but who's actually made bets of these markets. So if someone's smart, someone like that. And what did he say in his LinkedIn article? QT has stopped, QE has started, and we're stimulating into a bubble. Oh, but John, Ray Dalio's wrong. The top's in. if you're saying that, you're so full of yourself right now. Seriously. One of the most successful hedge fund manager on the planet for 50 years now, investor. A person who actually invested for 15 years. There's so much lessons we can learn from him. That's where I'm at right now. I still learn a lot from him. I'm not the smartest investor of all time. I've been a trader for most of my life. Pattern recognition, stuff like that. But I'm slowly getting better at this other stuff right now, the last couple of years, or last probably 3 to 5 years now. Because I'm learning from the legends, right? I'm learning what they're doing. And if you see what they're saying and they actually tell you what's going on, stimulating into a bubble, oh, hello, he's telling you what's going on. But no, I'm going to be smart and I'm going to go against Ray Dalio. So, right, that's what's happening. Also, then we can start to add all this other stuff that we talked about. If the dollar's going to keep depreciating at a much more rapid pace and you think it's the death of the dollar, that's bullish for stocks. If you think we're going to default on our debt right now, that's bullish for stocks. If you think we're going to go through another recession, guess what? Yeah, we'll go for another recession. Stocks will probably drop, but they're going to come in real hard with the QE, right? Which we're not there yet, right? We're not there yet. People can keep calling recession and top and so on and so forth. So I just gave you all these reasons why the market's going to go up. And on top of all that, I'm still getting a lot of the herd right now. Talk about the herd mentality. I'm still getting a lot of the herd right now saying, you're an idiot, Jordan, the market's going to go down because of, and then the slew of reasons. Their ego, their whole, whoa, it's the valuations, it's this, it's that, and the market's at all-time new highs. Again, why the herd mentality is always wrong. So, by looking at this level here, and by looking at the big picture here on the stock market, there is so much bullishness around the markets. Now, this is where, once again, if we do get a bit of a short-term drop here, say the market does drop and we go for a 10% drop to the downside on the S&P. What does that mean? Is that the top? No, it's actually this here is just part of the trend. If we've got to move from there, if the stock market ran from here to here and we did this, da 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 do 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 do. Man, I love this shit. If we got that, remember, what is a trend? A trend is higher lows and higher highs, right? So the trend is your friend until the end. The trend is your friend until the end. So if the market comes down through there, is that the top? No, because a higher low is formed by what? By the market coming down. Look at that through there. Even all through here, these major highs and major lows, even through there. So a drop in the markets, a drop from here to here is not the major top. It would just be coming down because a higher low is formed by a market going up first, then dropping for a little bit. It could drop for a few weeks, sometimes even a couple of months we can go through this pullback. But that's all it is. But if you're so focused on this here and you start to see this thing falling off a cliff down here, and you're focusing so much on the short-term picture, you're missing the forest from the trees. So you think the major top is in, which most people think have done, and then they miss that, and guess what? And then they completely miss it because then they see this thing going down. But that's the reason why what I want you to do is I want you to be looking at the big picture, see where we are in the cycle of things. Is this a major top or is this just the drop in a big bull market? There's a differences there. If it's a drop in the big bull market, it's part of the trend because that's what a trend is. You know the trend is your friend. You know a good trend is higher lows and higher highs. You know that. That's technical knowledge 101. But what most people just simply don't understand is that on the big picture stuff, there can be short-term movement on the daily charts, but on the big picture, oh no, wrong one. That's the daily chart. It's the weekly chart there, right? On the big picture, if you understand that, then you understand that the market has to, if it's going to do that, I'm not saying it's going to do that, but even if it does come back down to 6,000, that's not a major top because it's just making it's still part of a massive upward trend here for since 2020. And so If you are calling a top right now, you have so many things going against you right now. Just be smart. Again, I understand. I'm still going to get 90% of you guys calling me an idiot. You have no idea what you're talking about and blah, 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 blah. I understand that. Cool. That's what 1% is all about. I'm still getting it right now. I understand. That's what, guess what? Hey, that's why I'm happy being long the stock market right now. And if the market goes down 10%, guess what? I told you were wrong, John. You got call options. You're under the water. You're losing so much money. You were wrong. That's what's going to happen, right? Short term. Now, if that does happen, come back to me in 6 months' time frame when we're screaming up to 8,000, and then I'm making a lot of money because I'm not focused on the short term right now, or even this. I'm focusing on the next 6 to 12 months and where this thing's going. And ultimately, this thing's probably going to head up to 9,000, especially when it breaks 7,000. Now, if it breaks 7,000 now, if we hold here now, which it can, buckle up, because we are about to take on some serious movement. And if you are short the market and we start to break above 7,000, you better hold on to your horses, because I'm sorry, the horses are going to go up so fast, they're going to buck you off real fast, because we're about to take on. If we hold here now and break above 7,000, which looks like, go back to this chart here. Actually, I'll go back to this chart here, the daily charts. If we hold and break up here, and we really break up here, and we start to get, I'd say if we can start to get to the 7,100 print, you know what that means, right? If you want to be short and do that sort of stuff, and you want to be short now, okay. You have so many things going against you, right? But once again, if we break above 7,000 right now, it is going to start to really, really move. That's a strong breakout. This pattern here and what we've been doing here, and if you know anything about my work and what I've learned from WD Gann, and that is when the market goes sideways, just like the NASDAQ's been doing as well, like it is here. Look at this here. Sideways overall, right, for all this time. What is that? When the market goes sideways for 5 months, it's building energy. It's building fuel. So what happens if we hold here, even if we do drop a little bit, which is then a little pullback, still in a big bull market, and then we make another move up like that? What does that mean? Get ready for at least a 34,000 NASDAQ. This period through here is energy building. Oh my goodness, there's so much bullishness in the markets right now. Well, not in the comment section. I'm an idiot in the comment section. But that's okay. That's okay. That's what they said about silver, and I made a lot of money on there. That's what they said about TMF, and it's now back there. I got a lot of that last year with XLE and XOM. That's the same thing. Like, energy sector sucks, John. That's not going to go up because the recession's coming and it's deflationary period and blah, 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 blah. I got that last year. Now it's broken out. Now what we're doing? Oh, XOM, XLE to the moon. Now I'm starting to get a bit of herd mentality behind it. It's like, I'm telling you now, bring on the hate. It's like, because I just know, once again, if you want to be part of the 1%, you better be ready for that. And it's very, very hard to actually do it, by the way. It's very hard to do that, right? So it's very hard to do that, meaning like you're part of a position and you have, especially if you're public about it, and you have hundreds of people that are commenting on your videos every week and every month, like I do, actually thousands of people, basically calling me an idiot and so on and so forth and so on. You really need to be strong in yourself, thick skin, to be able to go with what you know is best, and you end up winning anyway. And then the herd gets slaughtered. So, but same for the NASDAQ, right? The big picture of NASDAQ is, guess what? Look at this massive big bull move. We've continued to be, every little dip since the 08 period has been what? Nothing but higher lows, higher lows, higher lows, all that, right? Look at this here. All big higher low, higher low, higher. Every little dip has been what? Not a major top. Higher low. Even this little drop through here, which was that about 12 months. Higher low, another higher low. Oh, but right now, John, you don't understand. The top's in right now. Right. Good on you. Yeah, that's what you've been saying for 10 years. You probably have no money left and you're coming on the comment section on the YouTubes and all everyone else's YouTube saying, I'm laughing because I'm laughing because there was this person on my YouTube comment there, commenting on my YouTube videos there for a while. I'm like, who is this guy? So I went and checked this person out. He's a kid. This guy's a kid, like a 15 or 16-year-old kid. I'm like, golly, where's your father? Get you in the gear. It was a kid. I'm like, I'm sorry, my oldest son is older than you. And you're on my comment section doing your little thing. It's like, his father must have taught him how to be a troll with people on the internet, how to troll people on the internet, because that's what a lot of time is, and that's where you can't really worry about that sort of stuff. And I don't really myself, because a lot of the times with people trolling, they're just trying to get a bite out of you, and when they don't, they go to someone else's YouTube video and they just do the whole day. They're just dozens and dozens of comments on all these YouTube videos, trying to get a bite. Right? And when they get a bite, they're like, yes, I got a bite. Yes, I got underneath his skin. Oh, yes. And then they get high on that. They're not here to learn markets. They're just here just to troll the shit out of you. So that's the stock market overall. Big bull market. It's continued that way. And guess what? The trend is your friend until the end. And there's very strong momentum. And what has been doing is probably going to continue because it's still going up. And there's a massive probability, at least a 70% success rate, that we're probably going to continue with the trend, because that's what happens. So NASDAQ to the upside, to the moon, to the moon. Same for the S&P. We get a little drop from here. Say a little prayer to God. Say, God, thank you for the gift. If we drop down to 6,000 on the S&P, can you, like, the negativity right now around the stock market. Right? Could you imagine that happening? If we got even if we got a 5% drop from where we are right now, the fear and greed index would ping straight to extreme fear. Oh my goodness. People would there's fear in the marketplace right now, and we're still at all-time new highs. It is absolutely crazy right now. If you actually go check out the actual fear and greed index and you see where it's at, it just blows my mind what's happening right now, right? It absolutely just blows my mind. If you actually check this and actually see what I'm talking about here, you'll know exactly what I'm saying here, right? This here is the fear and greed index. As you can see. Look, we're actually in fear. The stock market's just a few percent from all-time new highs, but we're in fear right now. And as you know, look at this here. Right down the bottom here. What was that? Down the bottom here, extreme fear. Extreme fear. What happened to the stock market when we got to extreme fear? Amazing buying opportunity. And then we had a rally, right? As you know, from November, we actually had a good rally off that. Even though November wasn't a big rally, it still found a bottom and we had a big rally. So if we get another 2, 3, 4% drop, you know what's going to happen here? Amazing buying opportunity. So do not be getting sucked in by this whole herd mentality thing. There is so much bullishness out there. Well, actually, the noise is bearish. Oh, recession fears, all that sort of stuff. And then people try to be smart and then the market goes up. Right? So let's actually do this here. Where are you? Right. Yeah. So that's what we're seeing from there. Now, that's what I'm seeing from what's going on there. Now, on the big picture analysis on all of this here, things like the Russell has, again, still been in this very big upward movement. This is a monthly chart, by the way, guys, and we're just breaking out now. If you have a look at the actual Russell on a weekly chart, or even from a daily chart perspective, you'll be able to see that, as you can see here, even from the Russell has just started to break out now from this level here. So we are now breaking out of doing nothing here for this time, and we're slowly making up. So Russell is probably going to continue up to around about that 300 level there. And the Dow Jones is By the way, that's when I went long the stock market, by the way, down here. That's what? That was when the fear and greed index was what? At extreme fear. Oh my goodness, extreme fear, buying opportunity. And look up in the Dow Jones, the Dow just kept going up. Oh, the top 10, 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 the top 10. You got no money left. Well, actually, you probably do because you're a coward and you're calling the top 10. You're all over these YouTube videos saying why the top's in and all, and you're giving just a spiel of all these reasons why you think the market's going to go down, and you're not short. Good job. I'm long the stock market. My money's where my mouth is right now. But a lot of you guys are saying the market's going to go down, the market's going to have a big crash, and you're not even short. Righto. Good job. I saw this many times on my YouTube channel. And I have these people like, oh, top's in, the market's going to go down, valuations, the debt bubble, oh, there's so much crap in the That's reasons why the market's going to go down. And I said, well, I'm actually long the stock market right now. That means, but I'm guessing with you're so convinced that you're actually short the stock market right now. And he goes, oh, come on, John, you're better than that. Just because I think the market's going to go down doesn't mean I'm actually short the market. Come on, you know I'm better than that. Right. That's how convinced you are, right? Yeah. Yeah, because I do know if you had that mentality, you have no money left because you've been shorting the shit out of it and you've been losing a lot of money. Why? Because you're going against the trend. There's a trend here right now. Don't make life hard for yourself. Trading the market is hard enough. Trading the market's hard enough. Do something that works most of the time, not some of the time. What does that mean? If there's a trend in place, most of the time that trend is going to continue. Go with that. There's some of the time that happens is the market will top and we'll get a bit of a drop, or we'll get at least a short-term drop. That's what happens some of the time. And people want to trade that some of the time. And if I'm going to use a generous number, it's 70% of the time the trend's going to continue, 30% of the time it's not. But people want to try to be smart and try to trade the 30% of the time. And they wonder why their year sucks and their whole trading career sucks. Because year after year after year, they have a foundation of only being right every now and then. And then guess what? On top of that, then they completely miss the buying up these massive buying opportunities. I'm telling you right now, guys. I'm telling you right now. There are so many reasons why this market is likely to go up. If we do get a drop, and if you think this is the start of the big one, calm down, settle down. I'm trying to give you a warning about what's going to come. Because FYI, FYI, you know, FYI, FYU, every single time, and this is where it's so hard for most people, right? But I understand it now, but it took me a long time to actually get this. And I'm expressing this from an experience, from a level of, I didn't understand this myself. It's only been the last 5 years that I've started to actually acknowledge this in the markets. I've been trading markets for 20 years. But to understand this side of the actual trading and investment side, we're looking at these different things here, meaning that when the market does go down, I need to keep an eye on the big picture. If the market goes down for a couple of weeks, or even these drops through here, is that a complete change of trend, or is it just making the trend? And also, I've noticed, and as you can see through here, and even on the S&P 500, every single one of these times, even from the last, and even if I bring up the last 5 years, just to show you guys a bit more, every single one of these times, guess what ended up happening? Every single one of these times, it was the same repetitive pattern. Down the bottom here, and even through here, right? This actually wasn't the exact bottom, but even down through here, you didn't get exact the bottom, but down through here, and even through here, you know what was happening with COVID, right? Right here. This is when that maximum fear started to really click into place, right? And it's at its worst, what seems its worst, noise, fear, oh my goodness, before it turns. And that's the reason why, again, the investment in the opportunity is so hard with the stock market, because they see that, right? And it's always, the market is always opposite to what you think, right? So we're here right now on the S&P, and you see where the fear and greed index is right now. We have a little bit of a drop. That thing's going to be straight to extreme fear. You know what's going to happen to that? You know what's going to happen to the stock market when that happens, right? When we get back to extreme fear, it's going to be another big bounce, and we're going to bounce back up again. Because the fear in the marketplace is fuel for upside. The fear in the marketplace is fuel for the upside. So right now we're at fear. Another couple more percent on the downside. We're going to be back at extreme fear. That fear is fuel for upside. Maximum fear, 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 fear. So I would not want to be fighting this market. If you're short in this market right now, trying to capture that small little move here, what are you doing? Capture the big moves, the big profits. And by the way, they have been going, the big profits have been up, not down. Okay. That's if you want to be around here right now, but you guys are looking for that short-term little buck. You're probably trading short-term options, looking for that big crash this week because it's going to happen this week. And then you lose all your money. And then you blow up your trading account and you do some really stupid shit like that, big risk. And then it goes from there. Now, moving on now through to the metals and miner complex. This is the big picture here with the metals and miner complex. I believe we have a little bit more upside coming with the metals and miners, but we are towards the end of this bull market. And I know what you're going to say, right? But there's short-term movement, but there's big long-term trends, right? And look at this here. If I bring up, market's open right now, is it? Look at that, market's open. Right, now, moving on now to gold. Big long-term picture. Weekly chart. This is the weekly chart out of gold through here. Okay? We have been in one of the most craziest bull markets. Let me bring on the GLD. One of the most craziest bull markets we've ever seen. But John, this time's different. No. All markets work the same way. And if you actually stop and think, what do you think they were saying back here when we're going through this bull phase? Oh, this time's different. The bubble's going to crash. And it's all the same thing. Now, smart investors will stop and look back and try to think about what was actually happening at that time. Oh. That's you getting like breakthroughs. Like, oh my goodness, breakthrough. I'm starting to get it because it's the same thing. Same. It's the same thing. No, there's nothing new left the sun. It's the same noises. It's the same thing. It's the same. This time's different, John. You don't understand. Throw the charts out the window. It's all the same thing. Now, again, you can take what I'm saying here. I have nothing to gain from you right now, right? I have nothing to, I'm trying to help you so you can be on the right side more, so you can be around here more than 1 year or 90 days. They say 90% of people lose all their money in 90 days, something like that. I want you to be around long term, but not just be around long term, actually succeeding in these markets. And this is being smart about what we do, right? So if you understand that everything goes through cycles, there is a cycle to everything. Just ask the Bitcoin folks. What were they saying 6 months ago? To the moon, to the moon, to the moon, to the moon, to the moon. And everything will go through cycles. We have this bullish phase cycle for a while. In this case, a couple of years out of gold. And then we go through the corrective phase or the consolidation phase as it rests and rebuilds. That's what all markets do. Now, yes, I believe by the early 2030s, we're going to see a 10,000 gold, but we're not going straight there because everything goes through cycles. And it doesn't matter what you think, what you hope, or what you fear. Look at the facts and look past through history and you'll be able to see this is what markets do. And so if you start to look at, say, for example, this is an example here, right? This is an example here. You go through the history of all markets and you know that even by looking at, this is a big long-term monthly chart now. So I'm not calling a top today. No one knows when the top's going to be in. But the smart investors know, okay, maybe over the next 6 months, we might be forming that top before we either A, go through a 50% correction, which, by the way, a 50% correction is what? Every time we've had these bull phases, again, this is a monthly chart, what does end up happening? This time's different, John. Shut up. No, it's not. Well, this time's different for you because you're here right now. You're experiencing right now for the first time in your life. This time's different. Study history, please. Sit back, get off your high horse, and go study history. And sometimes that means go look at the charts and bring up the last 100 years and go through these booms and bust cycles and see what was happening to the charts and what was probably happening with the herd mentality. And why did this happen? Because every single bull phase, as you can see, from high to low, where did we get down to? The 50%. Even though this big bull phase through here, we actually eventually came back down to 50%, right? Same thing from here. This major high, major low, this big bull phase from here, from 05 to 08 period, and then we had a correction down to 50%. A 50% correction. Ooh. You know, this time's different, right? Same thing for me. Up, down. So firstly, we're probably likely to get some sort of 50% correction out of this. Now, that's not a bad thing. If you actually look at it, that's actually just part of a massive cycle that's in play. Not a bad thing, but that's what's probably going to come out of gold. No, this thing's not just going to keep going up and up and up and up and up and up and up. And we're just going to keep doing this here. Here we go, up here, here we go. Here we go. Here we go. It's got to the moon, to the moon. Well, that's what Peter Schiff says. No market does that. This time's different. Please, learn history. Not this time is different. This time is never different because there's repetitive patterns that happen through cycles, history, and so on and so forth. And if you sit back and look at these markets, look at these charts and how they actually truly operate, not from your little corner there, you'll be able to see this. And then again, I strongly recommend you go listen to Ray Dalio and the way he talks about things happening again and again and again for the same reasons. There's actually nothing new in the markets. There's the same herd mentality. There's the same fear and doubts and so on and so forth. So what's probably going to happen, I don't know if it's going to be here. We may even, I'm thinking maybe 6,000 is probably where we're going to have another leg up to initially, right? And then guess what? Then the greed's going to come back out. The greed actually went away really quickly when that actually happened, right? Silver, gold got crushed. And it went from like, this time's different, throw your charts out the window, it's gone to the moon. And then one day, bam, they disappeared. Went real quiet, real quick. I had hundreds of people in my comment section giving me a hell of a handbasket. Little Miss Riding Hood, right? Gave me a hell of a handbasket for all that stuff. And then, just like most of the cowards on the internet, as soon as that actually did happen, as soon as the silver and gold correction did happen, and I made a lot of money from that, thank you very much, most of those comments went, fish, disappeared. Overnight. That's what happens, right? Now what's going to happen? Back up to 6,000, it may even go to 600 on the GOD, 600, maybe 650. But we're towards the end of the last 10, maybe 20% of the move, of this entire move, before we go through another one of these resting phases. And if you understand the market is like an energy source, look at the chart, look at history, look at everything, and you'll understand the market is like an energy source. And the market never just goes up and up and up. That's why it forms trends, right? A market go up for a while, have a pullback, form a higher low, up for a while, pullback. But then we have these big, massive cycles also at play. And it also happens on big long-term monthly charts. So the big long-term monthly chart right now, to see this here, there's a significant pullback coming in gold. I don't know when though, right? That's the whole thing about that. Now I'm not short gold from this level here, right? This is still a very big bull market, so I'm definitely not short the bull market. I'm very bullish metals and miners, long-term though. Right? But just like all markets, there we go from there to there. Look what happened back here. Look at back here. Big bull market through here, right? Oh my goodness, look at gold go. Oh my goodness, up 50%. Oh my goodness, boom, 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 boom. And then we enter through what? Another one of those phases, because that's what markets do. They go through what's called a price phase. Study WD Gann. He will teach you a lot about price and time. Or you can get access to my free trading course, and then I'll teach you in the free trading course. That's at johnsfreegift.com. You get the book, and you also get the free trading course. I teach you about price and time. Because the market is like an energy source. That's the reason why we go through this simple here. And if we've been going up for a while, we've been using a lot of energy, use a lot of energy, And then we go through this period of resting and pullback. And most of the time we pull back, look at this here, right back, smack back on the 50%. So if we do, say for example, this guy has no idea what he's talking about. Love it. Say for example, we went to 6,500. Say we had that extra move in gold. I'm looking at the GLD price here, and we did do that. What does that mean? Therefore, I would say on an actual conservative approach, we're probably likely to see a move back down, say, to the 4,000 level. Let's actually bring on the actual, something like this here, right? Something like this here. Because this is what I actually see, by the way. There's the 10,000 mark up there. So we're probably getting ready for another move down. We might go to 6,000 through here. A bit of a move up. And then, major low to major high. If we did get to 6,500, then we're probably going to come back down to, that's all I see is this probably come back down to at the time, maybe around here somewhere. 3,500 maybe. And that would give us a good 40, 50% correction. But all that will be what? Let's go back to the GLD price now. All that would be, in the grand scheme of things, would just be, because that's what markets do. Look at this chart. Look at the chart. Every time we go through a bull phase for a couple of years, we end up going through a resting phase or pullback phase. It's what happens. It's coming. That's what markets do. Okay? No, John, you don't understand. All right? Then we get a bit of a pullback here. A little pullback there. And how that pullback happens might take a year, whatever, right? And then we go through a bit of a what's called one of these sideways consolidation phases. We're generally within the sideways consolidation phase for a couple of years. And I'm just, forget the actual timeline here, right? Forget the actual timeline here. But what we're doing here is I'm giving you an example of, I'm giving you an overall view of what's likely to come. And then, so long term, then we see this whole, here we go, bing, bang, bing, bang, bing, bang, right? And then we see the next big leg to the upside. So long term, I'm massively bullish on gold. But how that big long-term bull, look at any chart, look at any very big bull market, and even if we go through these extraordinary bull phases, they're always encountered with these pullback phases because that's what markets do. They go up, they come back down. They go up, they come back down. And again, if you just look at the actual gold chart itself, this is the weekly chart on gold. What do you notice? Market go up, market go down, market go. That's what markets do, right? So just like all markets, get ready for a bit of a pullback there. And this applies to even the mining sector right now. I'm massively bullish. Metals and miners right now. I'm massively bullish long term. But that also means just because I'm bullish doesn't mean I'm not going to. I understand that we're probably going to go through a good 12 months or so of a correction soon out of that because it needs that resting phase. It needs a bit of a pullback phase from there. And then we're going to get going again, right? So that's basically what I see from there, from the really big long-term picture from there, and what I'm seeing happening in the stock market, what I'm seeing in gold and silver. And there's so much opportunity here. What you don't want to be doing is if you're looking for new opportunities, it is not getting involved with a market that's already made a big move, right? Especially with made a big move and there's a lot of positive sentiment around there, right? You want to wait for really good times, meaning like it's actually had a bit of a resting phase. Waiting in the stock market has actually done what it's done right now. Again, look at this. Look at the Nasdaq. Why has the Nasdaq just gone sideways for all this time and a little bit of a correction here? Why has it done that? Because that's what markets do, right? They go rally, they go sideways. If we do get a drop here, it's going to be a gift from God from there. So there's a lot more upside to go from here. Sentiment is very still negative. It's crazy to see that we're still basically at all-time new highs in these very big bullish environments. And from there, from the negative sentiment, from a technical and everything else I've said here, if we do get a short-term correction, which by the way I'm hoping to see, and I'm hoping if we can get a correction down to 6,000 on this chart here, on the S&P, as I said before, even better because we still have a lot more upside to go. That's not the same for gold. Gold has been in an incredible bull phase for 2 years. Incredible bull phase. It's coming towards the end of the bull phase from there. The gains was you getting involved with gold 2 years ago, not gold right now. If you're looking for new opportunities, it's definitely not gold and silver right now. We're probably likely getting towards the end of that phase. And from there, we're probably likely to get a bit of a drop, but still a lot more upside to come in gold. But then all these other markets, there's opportunities out there that are starting to present themselves in different sectors and different stuff. This is the overall view on the indices and gold and silver in the mining sector. But in the actual stock market, in the individual sectors, there's many opportunities out there, right? The health sector is a good opportunity. There's all these different sectors within the stock market that are still really amazing that people are not focused on, people are not talking about. And even individual stocks are going to come across your plate. They're going to be really, 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 really good. So from there. So there's a lot of really good bullishness coming. All righty. 2 sessions done today. Wow. 2 sessions in and we're 90 minutes in already. How good is that? How good is that? So good. Let's go. HRL to the moon, eh? HRL to the moon. What is HRL? What is that? Is it this one here? This actually could be a shorting opportunity for me. I'll buy put options on it. Buy put options on it. Okay, cool. Now, what I want to focus on is let's see. I'm going to cover now. Yeah, let's do this here, okay? Let's do this here. What I want to cover right now is I want to cover 2 different things, okay? First, I'm going to cover rates, but I want to teach you a trading technique that really helped you. Now, this is a bit more of an advanced technique, right? A bit more of an advanced technique. But once you start to really understand this technique has allowed me to see this drop coming in the interest rates. And it's a very, not many people understand this. This for the last 20 years, I've been studying WD Gann and having some access to some amazing mentors and myself spending thousands and thousands and thousands of hours on it. I myself have started to realize this more and more and more, and it's pretty powerful. Now, what this does, it starts to show you that if we've had a lot of buy strength within a particular market, sometimes we can see those buyers losing a lot of strength. So we can become strong buyers for a while. So the market's in a strong buying activity. But this technique allows you to start to see when those buyers are running out of steam. And typically when that happens, it's just a matter of time before the sellers come in and knock it down. It's really, 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 really powerful. It's called angles in the markets. This is only something that I really normally teach my elite group. I don't normally teach it in the public. It's not that it's secret. It's just because it's more like an advance, and most people are not even in grad one, not even understanding what a trend analysis is. Well, they think they know what a trend analysis is, right? And again, so this technique is quite powerful, and it's one of the reasons why this is one of the reasons why I'm bullish TMF right now, and TLT, because of everything I'm seeing right now in the actual interest rates. And so let me actually teach you what this is here, okay? Now, I want to share this with you here. I'm going to bring up a chart here. What I want you to do is I want you to bring up a chart, and could be weekly or whatever, but as you can see, this is a long-term weekly chart here. Actually, even go to the monthly charts. This is the big long-term monthly chart. This is over what I'm expecting, by the way, for you guys that are wondering. The overall, what I'm expecting over the next 10 years, this is probably what I'm expecting. I'm expecting a drop initially, and then I'm expecting winning. So this is the long-term rates, right? I believe we're going to go back to what was before. So this big bull phase through here, I believe that's going to be once again. I believe, as you can see, this last 40 years of downward phase, this last 40 years of way of living, everything's starting to slowly shift underneath our plate here. So much, 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 much higher interest rates. I just don't know how that's going to affect asset prices, even property. So maybe the massive property boom that we've been in for the last 40 years and just crazy bullish movements, maybe that's going to start to settle down again. So, so that's basically what I see from there. Now, the whole thing about this here, right? I want you to think about this here. Oh, that's obviously, yeah, that's the big picture there. So let's actually, what I want to do right now is I want to go down to the weekly charts, okay? I want to go down to the weekly charts, and I want to show you this here. Now, I'm going to open it up a bit more here. And actually, you know what? Let's actually do this here, because it's much better if I bring up, let me bring up the TC2000, therefore, no, the trading view, because trading will allow me to do the drawing stuff on there. That's going to help me when I'm trying to educate you guys around the what I'm trying to share with you here, okay? So once again, what I'm about to share with you here right now is that it allows you to see that if we've been in a very big, strong, bullish environment, how do we start to see when the buyers are losing strength? And so actually, you know what? I'll do this here first. Let me actually do this here instead. I'll do this first. Let me show you a template here first. So because on my screenshots that I've got, let me go back to here. On my screenshots, I've got a lot of screenshots here of different things that I trade and look at and so on and so forth, right? But let me go back down here. I want to share this with you here, right? This is an advanced technique. But it's quite powerful, and it's what's allowed me to now call this recent move that's been happening right now in the rate drop, which has allowed me to be very patient with my TMF trade and utilizing that. It's actually starting to already happen. Very, 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 very powerful. So let me go down to here again. These are all the different trades and stuff like that. They're all different patterns, but anyway, trend analysis, false breakouts, so on and so forth. Where is this here? And I want to share this with you here. I want to show you this here. So we're going to go to, we're gonna. Look at that, eh? Just trying to see where it is because I wonder where that is. I hope I didn't delete it. I hope I didn't delete it. Did I delete it? I hope not. I'll know when I see it. I think I deleted it. What am I missing here? What am I missing here? Anyway, this is a really good screenshot that I took. Oh, I can't believe I deleted that. Let's actually go check. Let's go check this one out. I'm pretty sure it's in this one here. Trend. There we go. I knew I'd find it. Here we go. Right here. This is called price phases and strength in moves. There we go. I knew I'd find it. So, why have I been so bullish this last, I'd have to say, especially this last couple of months, I've been really starting to become bullish this market. One, because the herd mentality, right? Two, we're in a cycle phase where rates go up, rates go down, rates go up, rates go up. So we've been in an up phase for a while, we're probably going to come down for a while, and then we're going to go back up. Up, down, up, down, up, down, up, down, right? That's how cycles are, what happens through history and all that sort of stuff. First thing, okay? Cycles kick into play. Secondly, herd mentality. John, you're an idiot. He's been in it for 3 months. He's still in the water. I told you he was wrong. Everyone's getting out of bonds, etc. Now, that's that stuff there. Now, what I also say is there's a thing called strength in moves, right? There's a thing called strength in moves here. And let me show you this here. So let me see if I can bring it up on the slide here. There we go. There she is, all right? Strength in moves. Now, what happens, and this is when people say charts are bullshit, you have no idea what you're looking at. Because what I'm about to share with you right now is so powerful. It's helping me do really well in this time right now. I'm going to share with you exactly how we utilize technique in the live market right now to see what's going on with the actual the rates and why rates are rolling over. Here, this is called price and time phases. Notice these legs to the upside. They're the buying legs, right? That's obviously where the buyers are buying it up, buying it up, buying it up, buying it up. Okay. You can see that through there. My little, is it green? So, firstly, we can see that we've had this strong buying period, right? Strong buying period all through here, all through here, all through here. You can see the angle is more like vertical, right? It's all like really vertical. And then we've had what's called selling legs, right? This is a selling leg through here where the market came down, buying leg, selling leg, buying leg, selling leg, buying leg, selling leg, buying leg, okay? But look what happened here. Every single one of these buying legs were actually quite strong in the movement, right? Very strong. What happened here? Notice that it wasn't straight up, almost vertical like these last couple of moves that we had through this time. What ended up happening? It was more flat. See how it's more flat? This is now, the buyers were very strong through here. Every time the buyers came in and they had the buying move, they bought it up, they bought it up. It was actually overall was pretty strong on the upside. Then what happened is, even though the buyers came in here, they were much weaker in up there. And you can see the angle, right? See the angle of that line there. It's more flat. These ones through here are more vertical. This one here is more flat. What does that mean? Well, if it's a vertical price, if we've had vertical price phases through here, that means we've had that the buyers are very strong through there, through those periods. Very, very, very strong. But if we've gone through a period of many buying legs and the buyers have been very strong, then suddenly out of nowhere, we do get another buying leg, which the market going up is what's called a buying leg. And it's not vertical anymore. It's slowly going up, slowly and surely going up like that. That's now the buyers running out of steam. The buyers losing strength. And we go from strong price phases or strong buying legs to a weak buying leg through here. And typically when you get that, guess what ends up happening? You obviously get, as you can see, you get this weak move up and then it rolls over and it drops. So it's looking at the angles of these markets to see whether it's strong or whether it's weak. So what I'm talking about here is looking at where are the strength in these markets here? Where is the strength? And if you can see that there's one side that has been dominant for a while, but they're losing strength. Now you know what I'm looking at when I look at the interest rates. So let me bring up the interest rates again right now. And now you can actually put the dots together in real time, not doing a little, oh, well, yeah, that's a bear flag. Look what happened afterwards and so on and so forth. We can utilize this in real time. And if you knew this, you'd be able to take advantage of what's happening in the bond market. Ooh, ah, ooh, ah. So let me show you this here. Let's go back to what? I love it. Where's my TC2000? There she is. Right. Now let's go back to the interest rates. Let's go back to what? The 10-year. And let me open up the 10-year. And let me show you this here. I'll take everything off the screen here. So we're just looking at the price. And now you'll be able to see from looking at the big picture why are we starting to roll over now? Ooh, because it's the same thing, but I'm recognizing it in real time. And that's how I'm in a very strong position right now with this position here. Because I'm recognizing it in real time. I'm not a backdoor, oh, well, of course, look what happened, right? Of course. Good job. Now utilize that in real time to actually make money. Look how strong that is. 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 Even through here was quite strong. What is going on through here? That's the same thing. So now we've had a period of many years on this weekly chart of quite strong bull phases. Bull phases. Good, strong buyers, good, strong buyers. Now what's been happening here for the last couple of months, actually longer than that, since September, we were starting to rally, but as we started to go up, was it vertical? No, it was slow. That means the buyers were losing strength from there. And when the buyers are losing strength and the buyers have been strong, buyers are 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 slow, buyers are becoming weak. And when buyers become weak, guess what? Guess who now becomes more dominant? The sellers. And then we get the rollover. So if you look at the actual, then if you actually look at, hey, easy. So weekly to the left, daily to the right. And you'll be able to see that this up move from here was just part of that. This move here, this move right here was just this leg right here. Very, 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 very weak. And from within that, within this weak move, This is advanced stuff. It's not, again, for people who are just looking for and this is where real study and real mastery of this here, you start to see these things coming and to take advantage of it. And that's why I've been so bearish on the interest rates. And I knew as we're going back here, it's like, no, it's going to roll over. It's going to roll over because we're very weak from here. And now look what's happening with the interest rates already. We're already starting to roll over from here. And it's just getting started, in my point of view. We're just getting started. So it's all right to call a backseat thing about, oh, well, yeah, that's an actual bear flag. Of course, bear flags make the market go down. Well, if you recognize it in real time, you see the reason why I'm actually making that call, but not making it after the fact, making it before and taking advantage of it. And it's not really a bear flag situation. It's more looking at the geometry of the stock market. And now you can see why I'm very bearish, because the same thing is happening on what? I've already got the lines drawn here. Look at that through there. We had these strong buying legs, and look at that leg through there. Why is the 30-year rolling over as well too? Why are we rolling over here? Because look at this leg here. It's much weaker. And then now we're getting the rollover effect. So we're about to see some significant moves in the interest rates, and which is obviously causing it. We're already getting a drop down on this 2-year. 2 years already breaking down from here. So I'm expecting to start to see a big drop in the 2-year coming real soon as well too, after doing this nothing here for a while. And then, of course, that is now putting pressure on why I've been so bullish on TMF, right? And so if you're good at this sort of stuff and you know this sort of stuff, you can recognize it in real time and you can go with that. You can understand that. And now you can see the reason why TMF and even obviously TLT, especially TLT, we're starting to break out now. So, but it's also now, it's also flipped upside down on TMF. So before we're in a very big, strong bullish environment, a very strong bull phase. But as you can see through here, right, the sellers have been very dominant through here, very dominant through here. So let's do the same thing for the sellers. The sellers have been very dominant. Is there something on the chart that can show us that the sellers are now losing strength on this particular chart? Because now it's not a matter of a bull flag or a bear flag. It's now something different. Is there something on here? Now let's go look at the legs here. We can look at the legs from here. Look at this here. Look how strong that is from there. I'll do red. Red. Look how strong that leg is there. See these this is called selling legs, right? Strong down, strong down. Look at that there. Boom, boom, boom. Strong down through there. And even a little bit through here. So you can see these legs were quite strong on the downside. Well, what's happening through here? Notice how this is more, it's not straight down. We're going down, but we're flattening out. It's more like a flattening angle. This is not a bull flag. It's not a bear flag. It's the technique. Now we can go from a bull flag to a bear flag to actually reading the technique. Meaning, these are the selling legs in the market, but this last time the sellers tried to come down, they were struggling. What does that mean? Now the sellers are struggling. The interest rates, buyers were strong, buyers are struggling, sellers are likely to come in. Sellers have been very strong through all this time. Now they're very weak through here. They're not actually, if there's another one of these patterns, like, right, oh, well, go back here. If this was another one of these, we'd actually get what? We get something like that. That's what it looked like, right? We get a nice, strong selling leg, but we're not. Notice the angle through here. The angle is telling you that the sellers are going down. Because if we go from, that's a strong selling leg, strong selling leg, strong selling leg, and then we do that, but it's going down, but it's much more flatter. And we've had strong sellers all the time. This point through here is saying they were strong, but now after being strong, they're starting to become very weak. This is an advanced technique. Some of you guys that are brand new beginners, you have no idea what I'm talking about. It's gone right over your head. But it's how I've been be able to be so confident in my call about the bond market and the rates. because this one powerful technique. And guess what? It's taking its time. Yes, I got involved with it November last year, right? November, December, January, February, November, December, January, February. So it's been about 3 or 4 months, right? But now you can see the reason why this is all starting to click into play. And then now, what are we getting? We're now getting a breakout. Now we're starting to, as you can see here, let's take it off the screen here. There we go. And as you can see, just by looking at this level here, and if I look at the actual daily charts as well too, easy. What's happening with the bond? What's happening with the daily chart? Big move up, right? Because now we're starting to click into play. So this is a really advanced type of technique that really allows you to start to see things coming a mile away. There's so much more that meets the eye. And see what I'm doing here? Most people are focusing on fundamentals or what they think is a fundamental. It's just bullshit anyway. Meaning like they think, oh, the bad inflation is going to be bad for the stock market. And then they make a decision, they lose money, right? Because they think, right? But then also there is so much power in the actual chart itself. And one thing you notice about most successful traders is what? Most successful traders, they start with indicators, then they eventually go what? They eventually just come back to the chart itself. Because there's so much power in the actual chart. And this is one of the techniques from reading the chart. But the reason why most traders can't see things like this is, one, they don't know what to look for. Two, they're not educated. And three, they're focusing on what the Bollinger Band and stochastics are telling them. And they wonder why that is. So that's what I wanted to share with you in this session here about why I've been so bullish bonds and why I've been so bearish rates, because of everything that's starting to go in through here. Now, once again, I've had to deal with a lot of bullshit and a lot of flack for the last couple of months because it went against me, especially this is my TMF position here. It went against me and I got in November, and there's been many months of this going against me. So this is one of those times that if you are not very strong conviction in what you're doing, you're going to get steamrolled by the public, especially if they know. Now, again, most of you guys, and Peter, my man, you sound like you know what you're doing. So please, you sound like really, really, really educated around these markets. You know what's going on. I really want to see you start creating YouTube videos so you can start making calls on them as well too, so we can watch it. I believe we all can learn from you. So please start creating YouTube videos on a consistent basis, making these calls, and make sure you keep the videos up there so you can see when you're wrong, when you're right, and you can be available like I am to the public. To that there. You sound really, you're very, 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 very strong in the comment section right now. So please start doing these videos and actually make them public so we can see, you actually can really put your neck out there and make these calls there. And so as you can see, this is the reason why I'm very, very, very strong in the bond market right now. And I think there's a lot more upside to go. And this is just the start of what's going on in the markets here. Now, one thing I want to, where am I? Yeah, baby. Almost 2 hours today. Damn, 2 hours, 3 sessions. I go deep in these sessions. Oh. Well, I'm going to finish up in a minute. So anyone that's actually is on live right now, it's too much work to make a video. No, it's not. It takes you 5 minutes. You open up the Camtasia, you click record, you record it, you render it. It takes you 5 minutes to render it. It takes you 10 minutes to upload it. Doesn't take me that long. But if there is anything you guys want me to check out while I'm here, just let me know. But I'm going to finish up in a minute, guys. But if there's anything you guys want me to check out, they're basically the session I'm going to do. I have some other thing planned, but being on for 2 hours now for this live stream. But there, we can just go from there. Now, let's actually see. Okay. Let's go down to this one. Right here. Yeah, open anyway. Let's see what's going on. Obviously, future markets are not open yet. Gold is still moving. Gold is still moving. This is the gold and silver market over there. The dangerous thing about gold, right now, I'm just looking at these bottom charts here, is that if this is the 4-hour chart, and this is the hourly chart here, if we start to get something like this, if we roll over and we roll over here like this, like that, and we get something like that, that's probably going to send this gold back down to these bottom down here. So if we did get something like that over the next couple of hours, then get ready for a movement back down to around about that. Probably 4,600. What we need to see, I've always said that if we do start to break up above these highs up here, if we do break that, that's what probably going to make a move to alternate time new highs, but we need to wait for the break first. But short term, if the market does roll over like this, even on this is the 4-hour chart here, and then the hourly chart over here, this is real short term. So basically, it's like we're looking at 1 day's price movement. Doesn't really mean anything on the big picture. But if we do get that, we are starting to slowly roll over here a little bit more. So if we do get that through there, then you know where we're probably going to go with gold on that short term. Silver, man, oil. Okay. The interesting thing about the actual, let's do this here. The interesting thing about, I want to show you this here for a minute, because I'll bring up these charts here, because if we go to the DAX, you can see the DAX. This is the DAX weekly chart. You can see the DAX was basically in the exact same pattern that the US stock market is in right now, or the S&P and also NASDAQ especially. Meaning, like, this is here. This is what the DAX has been doing since 2010. This is a weekly chart on the DAX, but it's the same type of pattern, right? Big upward channel for a while, and then we broke, and then we had a projection from there. So the DAX is actually making, this is what happens when you get these channels here. And when you break, look what happened here, right? We broke, we actually went sideways. See that sideways bit there? So whatever we actually broke here. And as you can see, if I zoom right in, look at this sideways period here. So not only did we break, this is a weekly chart, remember? We broke, we had a little volatility for a while. I actually believe this is what's happening in the stock market right now. And then when we broke, guess what? Then we went for another really big move to the upside. So the thing about that through there is, again, this is a weekly chart. So that's a matter of, man, quite a bit of time there through there, just going sideways, bit of false breakdown, and then we had to move up. So if I go to that point through there and I go to the actual, and I go to the actual daily chart at that time, as you can see, so this is what's happening on the daily chart over here. This is the weekly chart. What was the weekly chart doing? Beautiful, right? Look at this here. Long term up, and then down, and then back up, and then back down. Right, beautiful trend, high lows. So beautiful high lows there. But this little high low here is what? This is what's happening with the stock market right now, I believe, on the indices. Very split image, right? We've had a big move up for a while. Now we're doing a volatility for a while. We might get a little flush down, which is these patterns all through here. that there is that there on the daily charts. You can see the daily chart a lot more volatile. That's what I'm expecting on the stock market. If we did get that on the stock market, my goodness, the fear is going to hit the market real quick. And then boom, look at that. Took off like a rocket. Come down, little false move down, get people freaked out. And then look at the way, look it up and through there. Nice big move up. So it's the exact same thing that's happening in the stock market right now. It's the exact same pattern. But what happened on the daily chart though, on the daily chart, you get a lot more volatility. And this is where people that are focusing just on the daily charts, there is so much volatility through that there that they're missing the big picture. That's why we keep an eye on the weekly chart. So the weekly chart, here we go. Same thing. The really interesting thing about this here is we're on the channel. The DAX actually ran out above it. And then we actually started to develop that sideways period above it. What's happened with the actual US indices right now? Right? If you actually look at the US indices, where are we? Here we go again on my own. I'll go to this one here. This one here. Right? Where are we? Oh, it's the same. Hey, John. Hey, it's the same thing. What's happening here? The exact same thing the DAX did. It had a move up. Here we go. Here we go again on my own. Up. Now we're just going sideways through here. Right? Same for the NASDAQ as well too. Where's your NASDAQ? Well, I haven't got my trend lines drawn on the NASDAQ. Do I have it here? No. I'll stick with this one here. Right? Sideways movement, volatile. What's been happening on the daily charts? Same thing, right? Look at this here. Look at this volatility through here. Up and down and up and down, up and down, up and down, up and down, up and down. So if we did get that and we got that, it's the same pattern that the DAX did. Now, once again, as I said before, what happens when the DAX, what happened to the DAX when it did start to move? Whoa, geez. Blow. Right? What happened to the DAX when it actually did move? Can I delete you? Oh, I don't even know how to delete it. I'll go to the DAX. So what happened? The DAX held, it stopped for a while, little herky-jerky volatile. And then when it broke, out, guess what? I just called to say I'm off like a rocket, and it actually hit its target. What is the target? The target is the projected target. What is the projected target? The target is when you measure from the high to the low of the channel and it breaks out of the Chanel, you measure from the low to the high and you project it up and you find the target. And that's where it's likely to go to. So that's what happened there. So when on the S&P, we're doing this here, we're not there yet. But if we do break out, the projection is up here around 8.5. And the market loves round numbers, so it's probably going to overshoot to 9,000. By the way, just like the DAX did. That was the target, and then it kept going. What about the Nikkei? Nikkei did the exact same thing. Say it with me, ladies and gentlemen, boys and girls. There's a Chanel. Look at this beautiful channel. Ba-bum, 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 ba-bum. Beautiful channel. Beautiful channel. Then it broke out. We measured from the high to the low. Same, but different market. We had the DAX, now the Nikkei. Big weekly chart. Not the short-term herky-jerky. Then we project it out like this level here and we find the target. And guess where it got to just recently? It hit the target. Now, it took a bit of time. It didn't just go straight there, but the overall momentum was where? And look where it actually stopped. Can you make that stuff up? I don't think so. Look at this here. That was the target, and look where it's actually having problems. It ran straight there. Had a little break out, a little bit of a pullback first, then it had to move up. Now it's having a bit of a problem through there. You can't make that up. This is blue sky up here. There's no way you can say that that was likely to actually have a bit of pause. What even happened on the DAX? Look at the DAX. What did the DAX do? The DAX ran the target and then it stopped. And then we kept going. Ooh. Guess what? It's all the same thing. But this time's different. No, it's not. It's the same thing. It's the same pattern. And guess what? As a trader, when we see pattern, we see likely outcome of pattern. And that's how we trade, right? That's how you become a good trader. Because the trading pattern, when you're trading the markets, the pattern gives you the probability of the outcome. Probability, not certainty. So therefore, the massive probability, can I delete you? Probably not. It's like, no, you're not deleting me now. So if we go to the good old S&P 500, and once we do break out, you know why we're getting ready for a big move, right? Again, this is the target up here. So, once again, I don't know when that's going to break the 7,000 or break out, but once it does, once it does do that, guess what? We are getting ready for a really, really, really big move to come here. And so again, all we're doing here is what? We are trading the probabilities. We see the pattern and we see that, this could make a really big move. That move is now giving you having a good edge of having big profits and small losses. And that's how you win at the game of trading. It's not about being right or wrong. I'm right, you're wrong, right. No, take the trades, small losses, big profits. But we're looking for big profit opportunities. And plus also, this gives you an overall view of where the market's likely to go. Because it's the same thing. I've given you right now, and I've given you the aftermath. Both on the Nikkei and the DAX have done the exact same thing. They've both been in the Chanels. They both broke out. They both ran to the targets because that's what happens. But no, John, there's a negative news coming out and P ratios, and it can't keep going up. Really? It can't keep going up, right? And you're, I guess, are you a multi-$100 billion fund manager? Most successful fund manager on the planet? No. Oh, Ray Dalio is. Have you seen what he said? Stimulating into a bubble. Did you read that? A couple months ago, he put it out there. Oh, no, you weren't, because you're so focused on a stochastic or a MACD, or, the headline said there's a bad inflation, so I think, and then come up with some story, and the story is a lot of crap. So it's all the same pattern. The same pattern that has formed that created a big move up to the projection on the DAX and the Nikkei, and it's all, every market works the same way. Is the exact same pattern on the S&P 500 and even the DAX as well too. Sorry, even the NASDAQ as well too. It's just I've got the trend lines drawn on here. So once again, I don't know when this is going to happen. That's always the big when, right? When is it going to happen? When's it going to happen? That's always the hard. The when, I'm not too quite sure. The outcome, I'm very confident in seeing. And that is once we break, and again, if we do break, if we hold here and we start to get a very clear break up above here, for some reason we do that, there's a lot of pain for the shorts. A lot of pain for the shorts. Because it's showing you, hey, and especially since coming off the back of doing all this nothing time, this is called fuel. This is called energy building. And so once we break all this energy that was built through here, building it, resting, refueling, building energy, starts to get the release here, and we start to release the energy. And this could be really, really, really strong. And that's what the market's doing, right? It's actually testing people's patience. Is it going to go down? Is it going to go up? What's happening? Oh my goodness, a fake out. Every time it goes up, it's going to go down. Every time it goes down, it's going to go up. Oh my goodness, they're testing those patient little bumblebees. Or those impatient little bumblebees. And those people that are impatient right now, and going through this level here and getting really impatient through this level here and trying to jump on a gold 10,000 move, they're getting really impatient through here, and the same for the Dow, even for the actual NASDAQ as well too. That's what the market's doing. It's just testing your patience. But this is nothing but a refueling phase. If we do get a drop down, it's going to be short-lived. And it's same for the NASDAQ. Once we get a break above the NASDAQ, because the NASDAQ is doing the exact same thing. I just haven't got the trend lines drawn here. Let me show you the trend line tool, trend line tool, trend line tool. Let me show you the trend line tool, tool. There we go through there, right? There we go through there. NASDAQ, I've actually got it. I've already got it on my TC2000 platform. Let me show you this here. I'm pretty sure I do anyway. I'm pretty sure I do. Where's that there? Oh, I don't, do I? Do I have it there? Oh, no, I don't. Anyway, we'll just stay on that through there. But it's doing roughly the same thing. I had the channel there before, but it's doing roughly the same thing. I'm just not sure. Where did I get that from? Was it that one there? Maybe? Oh, there we go. That's what I was looking at. What did I miss it for? Yeah. Oh, I just deleted it again. Do that again. What? As I thought, I'm pretty sure the NASDAQ was in here. I'm doing this or not. There we go. There's your Chanel. What happens when we break out? Where's it going? It's blue sky. Oh my goodness. Well, Chanel projected target. There's your Chanel. There's your loader high. Sounds like the little modem startup, right? Remember the modem startup? And then it breaks out. Once it breaks out above here, from there to there, take you back up to there. So, do I have that on there as well too? Yeah. This is the big long-term weekly chart here. This is the daily chart. This might sound crazy, but this is where it's likely to go to. Time, I don't know. But pattern, guess what? The pattern is what tells us about what's coming up. So there's amazing opportunities all over the place. Once you know how to identify these patterns and understand what's going on. And all I'm doing is I'm going through the pattern repetition. I'm not trying to make up a story about this time's different or creating up some sort of made up story about this situation. I'm having a projected target because that's what markets do. It's a repetitive pattern. So get ready for it. Get ready for it. Hey. Just give me a sec. Life is amazing. Life is amazing. So many amazing opportunities, eh? So many amazing opportunities. There's always amazing opportunities. There are always amazing opportunities everywhere, right? Energy market. the energy sector, stocking market, individual stocks. Man, there's some amazing opportunities just on individual stocks. My goodness. Now let's go down to, let's have a good look at Bitcoin, eh? What's Bitcoin do? What's Bitcoin do? Bitcoin do nothing. I'm sensing one more move down, and then we're probably gonna this next move. I'm sensing one more move down. Actually, you know what? Let me do this here. Oh, geez. Cool. All right. So looking at Bitcoin and also Ethereum, obviously a bit of update as well too around what's going on. Checking out now Bitcoin where it's at. We've had such a big move in Bitcoin, such a big move down here. And as you can see, like, I want you to learn from Bitcoin, right? Bitcoin was like gold, and gold was like so on and so forth, right? It's all the same thing, meaning everything has its day. So if you think gold's not going to go down, what was happening with Bitcoin, 12 months ago, and what was happening and why is it going down? Because everything just goes in cycles, right? We're probably going to go back up again with Bitcoin. But what I am seeing with Bitcoin here is we're through here. I would not be too surprised if we had one more push down and then we start to see a very significant rally out of it. So what can happen sometimes to get the finalizing of that level there? We're already at that level here. So we're already at what is that? From that low to high, is that a 50%? Yeah, look at that. I guarantee you that all the Bitcoin folks would not have said, yeah, we're going to get a 50% correction down to 72,000. When is that? 123,000. So for you guys that are in gold right now and say, no, we're not going to get a 50% correction, it's just not going to happen. It's coming. It's coming. Don't know when though, right? Don't know when. So, but on the good old Bitcoin, look at retrace 50%. Oh, but Bitcoin to the moon. It's going to keep going up. This time it's different. Decentralized. There's only 21 million. They're not selling anymore. Oh my goodness. So much demand. Not enough supply. Let me go. And then it goes down 50%. So just keep that in mind for you guys that are really gun-ho about all markets. And guess what? Who gives a shit about any market, really? Who cares? We're here to get a good return, right? We want to get a good return for our dollar. So we pull the dollar out and pay the taxes. Oh, that's what I do anyway. Like last year, I did that last year as well too. Like I had 3 major withdrawals from my trading account from the profits I was making last year. And every time I did a big major withdrawal, at least half of it went to paying taxes. It's like, oh, there's a tax bill coming out. Pull it out. So I was really grateful for last year. Had a really good year last year. And so I had 3 really big withdrawals. And every time I had a big withdrawal, paid all my taxes from the profits. And I had a lot left over to live off and pay bills and just enjoy life. So I did that 3 times last year. So really, 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 really grateful for that. But now I'll go to this time frame here. So this is Bitcoin here. Yeah. So what I'm seeing right now is on the daily charts. Where's that 52 coming? Oh, it's a bit far away from the 52, isn't it? Yeah. So if we do get a drop down here, this is the 4-hour chart down the bottom. This is the hourly chart here as well. Let's do this here. Let's sync you in layer, but let's bring you down. Let's bring you down the bottom here like that. So if we did get a drop down the bottom here, a break back down below this low level here, that's probably likely to be a bottoming pattern. Now, what you want to see here to see whether it's got to be a bottoming pattern for you guys interested in Bitcoin is you want to see it actually be bottoming. But if we do get that, then we're likely to get a rally, I would say, back up towards the 90,000 mark. What am I talking about here? So this is the hourly chart to the left. This is the 4-hour chart to the right. How a bottom forms before we start to get a rally, if we get a rally at least back up to, say, the 90,000 level, is this. What they like to do, right? People who, the big boys, push this market around, they will flush it below the low levels. Because people that have gone long already, guess what? And I'll open up this chart much bigger here. I'll give you guys a bit of a gift here, right? So what happens here is down the bottom here, people have already started to go long, and guess where their stops are? Down the bottom here, right? So because we've already been going down for a while and we're down the bottom here, there is a ton of stops down the bottom here. So what can happen and what I'm watching to see in the good old Bitcoin market is this. One, a lot of the times we can get one more flush down. So it'll go like this and it'll come back down. Now this is a 4-hour chart, right? But I'm showing you short term. What would a short term bottom look like before we potentially get a rally back up towards 90,000, maybe even back up even to 100,000? If we get a flush down first, right? So I'll show you this here. If we get this here, right? This is an overall pattern, by the way. It's not just one day or one bar. But if we get, let's just say we get that, okay? Or you know what? Let's actually like that. Something comes out of the woodworks, as they call it, or something comes out, shocks the market, and Bitcoin gets a hammering down. Stage number 1 complete for bottoming pattern. Stage number 2 is what happens afterwards. Because if we then do something like this, like we might hold here for a bit, like that, and then it might even do it again. Right? Like that, and it might even do it again, like that. Right? But then something what happens is out of nowhere, it rams right back up again and it does that. If we get this type of pattern through here on the charts, then what's probably going to happen is that's going to be a bit of a bottoming pattern here. You can see on my daily charts up the top here, and this is my hourly chart down the bottom here. I'm trying to share with you what it looked like. So then this hourly chart through here, we're probably likely to get, there's a bit of a trend line you can draw there, I guess. See, there's a bit of a trend line there. So what's probably going to happen on a short-term level basis would be, when that happens, I would say then now open up the hourly chart. You're probably likely to get a rally back up towards this level up here, I would say at least. So I would say probably, it looks like that 90,000 level. Yep. Or probably even that, yeah, so that level through there looks like, so if I also clone and that through there. So this whole major reversal here, if that does happen, then once again, so, and it doesn't have to be like that. Like we could get something like that, and then you get something like even something like this going on, right? It's like a real big, and then you end up typically getting that, right? You might get a move up, you might get a little bit of a pullback for a while, for a couple of days, and then it starts to make its way back up. And I would say if I was short-term trading again, like if I was looking at the smaller time frame charts, I'd be keeping a real close eye on that, because if we started to get this pattern through here, right, if we started to get this pattern through here, I'll be watching the smaller time frame charts, because I'll be looking for a bit of a pullback and looking for an entry here, because I know there's a high probability we're about to see a move back up towards there. So actually, I didn't even expect to do that. I didn't even expect to see this, but I'm just seeing this right now. And if you actually look at and how that forms, I'll actually will show you an example of what that looks like in real time, so you can see why I'm saying that, what bottoming patterns actually look like. Bottoming patterns, after a big significant move down, they flush below support levels, and then they completely turn around really quickly. When you get that, they'll flush down and turn around really quickly. You get that. So if I'll bring up this one here, and I'll show you an example of what I did see. And that's the Aussie dollar versus US dollar. It's the exact same thing. Look at this here. This is the daily charts. This is the weekly chart to the left. If I show you the daily charts over here, here we go again. It's all the same thing, right, guys? All the same thing. Now, what do we get here on the daily charts? Notice how we got. See the support? Big major support, support, support. What happened here? Look at this here. Let's see the pattern. What happened? We flushed down past support really quickly. And then look what happened. It didn't hold. It came right back up again. So if I zoom in to show you what this looks like, look at that through there. It came down. This is this is a daily chart, by the way. This is actually daily chart, not an hourly chart. So I knew this was likely to be a major bottoming pattern, and we're likely to start to see the Aussie dollar start to rise against the US dollar. Why? Same thing. Major support, flushes down. It holds it for a couple of days and comes right back up for the next couple of days. Once that happens, I knew this is probably likely to be why I've actually drawn it through there. I draw this circle through. I'm like, this is probably going to be a good buying opportunity. It's a Forex buying opportunity, by the way. So I'm always checking everything, guys, myself. I'm looking at everything. I'm looking at cryptos. I'm looking at individual stocks. I'm looking at all markets because there's always opportunities. And this here was a major bottoming opportunity last year in April because I saw this coming. Flush down, right back up reversal. And then as you can see there. And then as you can see, ever since we got that pattern, what has happened to the Aussie dollar? Aussie versus US, big move up. Look at this here. Look at all this information from the chart. When we stop focusing on all this other stuff that really doesn't matter, we become a master of the actual chart itself. There is so much information we get from the chart itself. And once I saw this, I didn't know exactly how. Now, I was actually expecting when we got this flush down, and again, that flush down was what? Past all this major support level. Look at that there. Flush down and come right back up again real quick. Whenever you get that, it's a major support level. Yeah, that's probably going to, and we've been coming down for a while through here, right? Now, remember what I said on Bitcoin, right? Just like this level here. Remember I said on Bitcoin, if we get the pattern, let's do this here. Remember I said before with Bitcoin, if we get the pattern, we're probably likely to rally at least towards that trend line. So if you look at the same thing here, it's all the same thing, really, at the end of the day, right? See that through there? Remember I said with Bitcoin, if we actually get the pattern, we're probably likely to at least rally to the top of the channel, to the top of the trend line. If I go back to Bitcoin, here it is again. Oh, actually, no, this is the hourly chart. But if the hourly chart happens, if we do get, or even on the daily chart, right? Let's do this on the daily chart. So that through there. And we have this major support down the bottom. That's the low through there. If we did get this like that, and then it held, and then come right back up, then we're probably likely to make our way back up to that level there. Again, short-term movement there, short-term movement. And then probably what's going to happen then is that it's probably going to come down, form a bit of a higher low, and then actually maybe even start to break up. So this actually could be a bit of a major buying opportunity for Bitcoin. Maybe. We're not there yet. But as you can see, look what the Aussie dollar did. What did the Aussie dollar do? The exact same thing, right? Look at this here. We actually had the pattern. We rallied to the trend line. We actually had the bit of a pullback, and then we continued up. So they're the exact same patterns there. The exact same patterns that form again and again and again. And so that's what's happening with Bitcoin. And again, you just see this all the time. And so if you're ever looking for major buying opportunities, that stocks have been in a big downward market, this is one of the patterns that I look for. And when I saw this last year, I knew the Aussie dollar, US dollar was an amazing opportunity to go long the Aussie dollar versus US dollar. Because again, I look at everything, guys, myself. I trade Forex, I trade cryptos, I trade individual stocks, I trade options. I'm an all market trader myself. There's always opportunities all around the place. Now, so that's there. And as you can see with Bitcoin through there, right? We get a flush down, which is quite interesting. There's actually a bit of a support level down the bottom here as well. So if we did get a flush down, we're probably going to maybe even get down to that level there and then reverse back up. But we'll see. We'll see what it's got first there. So let's actually go look at. Now, if the same thing happens on Ethereum, this is Ethereum, and boy, oh boy, have people been getting crushed by the crypto market, eh? You guys remember the noise up here? And that was when Bitcoin was at 123,000. The exact same noise I hear in gold and silver. Don't you pick on gold and silver, John? I don't give a shit about any market. I'm here to make a good return. That's it. And by the way, if you are liking gold and silver, it should be a portion of your account. Not some of you guys are loading up 100% of your portfolio, and it's leveraged, and it's options, and it's short-term options. And then I know what happened. I know what happened on the drop there. I know. I could hear it. So many traders would have started going leverage long, leverage on the futures markets, options, short-term options, and away we go, blowing up their trading account. So let's go back to here. To Ethereum. Ethereum. So Ethereum is pretty much the same type of thing, right? If we do get a flush down, it's the same pattern I'm looking for. But the good thing about Ethereum is that we've got a really big long-term trend line coming up through here. So that long-term trend line is coming. This is the big weekly chart here. And again, some of you guys, this may be confusing for you. It's like, what? He's going to a 4-hour chart, to an hourly chart, to a weekly chart? Like, what? That's when, like, it takes a bit of time to really start to master the art of trading successfully. Because once you start to understand how to put these, what's called, how to use multiple time frames, it's with my 1% elite group that I have at getjohntop.com. It's an application for that. Or johnsfreegift.com is my free book and free trading course if you need some free help. But in my elite membership area that I give people, there's a section that I talk about how to use multiple time frames, because it's so powerful when you start to see what's going on here. Now, it does take a lot of time, guys. Like, I'm not gonna. It takes a while to really start to be able to just understand one chart and then to be able to use multiple time frames to see the story. It does take a bit of time. But if I bring up this 4-hour chart and even this hourly chart from here, I'll use the same analogy here. If we get a flush down once again, so if I was looking to short-term trade Ethereum and look, or maybe even looking for a buying opportunity out of Ethereum, that'll be the low level there, right there. So if we do get, once again, the pattern, which is the flush down, if we get the flush down, remember this, and then it gets down to here, that's also a long-term major support level there, which is this weekly line up here. So there could be an amazing buying opportunity coming with Ethereum, because if we do get that on this chart down the bottom here, that's the hourly chart there. If we do get this on the 4-hour chart, that's going to mean that on the daily charts up here. So I'll draw that from an actual line perspective, so I can. There you go. I can sync that. So if we get something like that, and then a hold, then we come right back up like that. Then I would say we're probably likely to start to, at least on a short-term level, probably start to make our way slowly anyway. There, it might come up through there, and then we might get a bit of a pullback for a couple of days. And then I would say we're probably likely to see something like that going on, which would be that on the weekly chart. So that level up through there, I would say somewhere through there. So for the pain in the crypto market, there may be, this is not there yet. That's why we want to wait for the pattern first. And then again, there's no guarantees of this actually forming a profit. So we apply risk management. And the reason why this is so powerful is because when you get something like that going on and you start to look at your risk, if you got in there, that there is your risk, red for risk, and that there is your profit potential. Big profit, small losses. That's what we're always looking for. We're always looking for these big profit, small losses opportunities in the markets there. So that's what we see right now happening in the good old Bitcoin and Ethereum market. I really broke that down in the detail. But as you can see, these techniques and the things, when you start to understand and reading the chart properly, what's the bottom look like, how these markets work, you can start to really apply it to every single market out there. So you guys that are interested in the crypto market, forget XRP. It's a piece of crap. But Bitcoin, Ethereum, there may be some buying opportunities coming up real soon, and we could be getting ready for a really strong rally. So that there, and then therefore some of the ETFs, like ETHE, GBTCH, maybe some option trades could be done through that as well too. So, but as I said before, guys, no matter what you do, there no guarantees of making a profit on any given one trade. You need to know that. Don't be loading up on big risk. If you get into a trade and you say if this is a losing trade, it's going to be a big loss, you are going to get destroyed. I guarantee it. Let me show you this here. Let me go to, another 3-hour session, eh? Going hard. I actually didn't plan on doing a 3-hour session today. Let me delete all this stuff. Make it all nice and clean. Nice and clean. There is so many opportunities. Yeah, and this XRP thing, right? XRP to the moon. XRP going to get destroyed. You got HAL. HAL. I just saw your thing there. TT3 HAL. Let's go look at that. Let's go. HAL. I think it's this one here. Halliburton Company. Yeah, this one here. So you got calls in this one. I've already drawn a trend line here, haven't I? Let's actually go to my other chart, this one here. HAL, once again, HAL. Okay. Just depends on when you actually bought the call options, because we've had a really strong move up through here. Where are the moving averages? There's the 24. What about the 52? Okay. Yeah. Expiring 2027. Okay. In the money. Not sure why you deleted that, but anyway. That was supposed to say in the money, wasn't it? What you said there. So yeah, right now anyway, we could be getting ready for some sort of a. We've been going up for quite some time. We're almost at this major level here. So I wouldn't be too surprised to see a bit of a drop here first. So we may get a bit of a drop here first, or because we're almost at that level now. So we may rally up a little bit more through here. And then that rally through there, we may get something like that. If we get something like that going on, we may get a bit of a pullback off it because it is still in this very strong downward phase through here. And this is just a rally in this bear phase through here. But if we break out, that's when we're going to probably see the big move. This is going to be the first leg up. But if we break out above this here, so for now, we're probably going to have maybe a bit more move to the upside, or maybe it's at that level there because the line is not exactly perfect. Yeah, so it may even be through there. So we're pretty much at that level now, aren't we? Round about that area. That's the one thing I'll be concerned about. And obviously we had that level through there. Yep. So a big rally up. We're still in a very big downward phase. So this could just be a rally before we go through another big bear phase. So there's not an upward trend yet out of this. Once again, we want to start to see the thing pick up, right? What do we want to see? We want to see this market rally up, come back down, higher lows, right? We want to see this bull trend through here. So we need to rally up. We need the thing to come down to then break out. This is the start of a new bull trend if that happens. And if that happens, then yeah, we're probably going to start to see some quite nice moves here. But I would say over the next couple of months, we're probably going to get a bit of a pullback off that. If the pullback is weak and it doesn't over the next 2-3 months, and then it breaks, then that's where you're probably going to start to see the bulk of the move. And rig course. Let's go check out rig. So this one here, very dangerous. Depends on when you actually bought the calls as well. If it's recent, you're probably going to be underwater for the next couple of months. But then if it does hold, and we break, then maybe toward I would have to say maybe the second half of this year, that's when it may start to really pick up. If it does do that, it may not. It may go straight down as well. Rig. What is rig cause? I'm guessing it's this one here. Transocean, yep. I'm looking at that now. Damn. Okay. Firstly, look at that move. Now, thirdly, the big picture, you are going to come into some serious resistance in a very short period of time. So that would be that level there. We may continue up from here. But if we're going to move up like that level from there, let's see. There's probably two levels in there. Is that one through there? No, it's already broken. Already broken that one there. Yeah, I'm probably making it up. Oh, it's actually through there. Yeah, this whole area for me, really, that whole area from there to there, we're actually broken through that. This whole area here is going to be a big problem for it. $7. It needs to get past this level here first. But we're not there yet. We're not there yet. Interesting. Alrighty, that's it for me today. Almost another 3 hours today. I am done and dusted.